All right. So the first thing that I would like to say to you is that in order to really be successful at foreign exchange is you have to have a passion for the craft. You have to have a passion, a true passion for it. And you have to be able to, when you look at this chart, this screen, it's not just gibberish. This is a way of life. You have to treat it like a business. You have to treat it like your spouse. You have to know her like you know your spouse. And the way, so if it may work out to your advantage, it may be best for you to go ahead and just choose one pair and stick on one pair. I know Q has told us that time and time again, but I really like the odds of you learning one pair. And when you choose this pair, you have to be able to kind of choose a pair based off of your personality. And by looking at the certain pairs and looking how they move on certain time frames, I believe you can figure out how certain pairs move. So, for example, there's a pair called GBP CAD, and that's it's a very exotic moving pair, and you can really make or break your account with that pair depending on what your lot size is. For me, I would be able to trade that pair after I know I have a couple thousands in my account with the cushion, and to say that I can afford to lose maybe 1,000 using a standard lot, which is maybe 100 pips, because my stop loss typically on that pair may be anywhere between 30 to 40 to maybe even 50 pips of a stop loss. I may lose $500 in one trade if I don't have the right analysis, and that's just me saying that I'm not perfect, and I will make mistakes. Nobody's going to win every single trade, but that pair, if you get it right, it will pay you very lovely. And because one 4 hour, let's go ahead and visit that. GBP CAD, one 4 hour candlestick could literally be, 100 to 150 pips on that particular pair. I'm going to use this particular candlestick right here. I don't know how many pips this is, but if I had to look at it, it'll probably be over 100 most likely. And that's 103 right there. Just this one candlestick. Just this one candlestick is 100 pips. So if you would have gotten any type of entry way up here, that's well over 100 pips. And this is only 4 hours of time. Just only 4 hours. So this is midday. You're already up $1,000 on a standard lot. Midday.
And you can see as well with that pin bar at the very top, that gives you confirmation, wick exhaustion. So you look out for these things. Mm-hmm. And again, you scale in onto the smaller time frame, and boom.
It's just like that. And
it's just like that.
To show you what she's meaning on that is I just highlighted this particular area going straight to the exact pinpoint, the pin bar there, going to maybe a 30-minute or a 15-minute, you'll see, some type of break in structure or a continuation of a trade going into that direction. So you see, obviously, marking things off here, just marking certain structures. You have structure right there. You have structure right there. This is just higher lows. You could make an argument that structure is pretty much right here, and the structure is going to break somewhere around this area. This highlighted square that we have was the exhaustion on the 4 hour time frame. So on the 30-minute time frame, you're literally seeing the high being made right here and a higher low being made, and then technically on this particular time frame, a lower high and a repeat low and a lower high, and now we have a lower low. So structure was broken for this uptrend right here at this moment. Then you had a full 100% retracement, and then you had the confirmation right here again underneath where we deemed the structure to be. And so that's your entry there, a very safe entry. And if you would have entered there, you would have had literally no drawdown at all. And that's how QST taught us to trade. If it breaks structure, you wait for that retest. This was the break of structure. This was the full retest. And here's one thing that I think will clear up a lot of things for people who are trying to enter the market. Let me see here. To God be the glory for what was just said on the screen. But so in order to really enter a market with full confidence, knowing that it has broken structure, and then you saw a retest, you have to wait for the bears to then come in the market, knowing that we're going towards a seller's move. Yeah. So if you see nothing but a blue candle, that's a buyer's candle. This is a buyer's candle. That's a buyer's candle. That's a buyer's candle. So all you see is just nothing but buyers coming back into the market, meaning that this is your retest. And right here where you see the first seller's candle, could you have gotten in there? Yes, but that wouldn't have been a safe entry because it did not. If this right here If this blue candle that was
variation
right there was your very last buyer's candle that entered the market, then it needs to engulf this candle if that's the most recent. Does that make sense, sir?
Mm-hmm.
So it would be a bearish variation in this case.
Yes.
Right.
We have engulfing patterns, which is one candle engulfing the previous candle, and then we have our bearish or bullish variation candles, where more than one candle engulfs the previous. So that's what's going on in this case here.
Mm-hmm. So this candle right here was not that time to enter. This one right here, this next one, was the first candle that gave you an opportunity to get in because it did engulf. If you didn't like the fact that there was a wick there, then maybe you could have waited, but this would have been your first, honestly, your first opportunity to enter. But if you wanted to wait for this one, then you didn't like that wick, well, you would have missed that one too. But this is literally where your entry should be safely. But this one right here would have been a more aggressive approach, but it would have been a good entry. You know, ultimately, you put your stop loss below the most recent high. For me, that would have been right there. I would put it maybe a couple of pips above. That way, I'm literally above the most recent highs that this particular time frame made. And so I'd put a stop loss maybe around about there, and I'd go ahead and get in my trade right here, and I'd ride that thing down until the market gives me a reason to get out. You know, and which is a lot of the reason why Khristine is highly successful. She'll stay in a trade until the structure breaks, and that's how Q has taught us. You know, you're looking at right here, no structure is broken. We're 3 days in, and you're over. You know, on the standard lot, you're over almost you're about $3,000 in profit at this point. And some people work a full month to get 3,000. In 3 days, we're having that. It's still structure, no structure is broken, and we're good. We're looking at 4 days of time frame, and we're over 3,000. You know, so at any given point in time, you can take profit. You don't have to, you know, stay in your trade. You don't have to swing any trade. If you're comfortable with 30 pips or 50 pips or 100 pips, you take your profit at that point. But you stay on that one pair, and you follow that one pair and watch how that pair moves so that you can analyze that pair, and that could be your main pair that you go to. A pair for you, and I really haven't gotten to teaching just yet, a pair for you that I recommend as NZD USD, simply for the fact that it moves very slow. But you can actually, whenever it does move, it moves. It gives you some really good targets to be hit. And it's pretty simple on the way that it makes up its mind on what direction it wants to go. You just have to figure out where you want to go. So I would write that pair down as a as a go-to pair that you can start with. And if I had to recommend another one, I would go with Euro I. That's the pair that I trade myself. This is literally my baby. Because it's really simplistic in the way that it moves. So to go ahead and get your you said your weaknesses. You said to identify the market, identifying the trend. That was one of your problems.
To identify setups.
Okay.
I understand trends.
Okay. Identify setups, and so are you basically meaning finding a trade is basically what you're saying, like multiple times.
Exactly. Yes.
Okay.
So when just like you open up this chart.
Yeah.
I say let's just say I got four pairs open.
Mm-hmm.
What am I looking for to choose the right pair to trade?
Okay. Gotcha. I'm gonna answer that question in a second. So what are you looking for?
And time frame correlation.
Yeah.
Breakdown. What I really wanted to do, but I'm in you guys' care, was to say to you all that obviously what I'm doing is not working. So I was going to ask if you can forget about what I've been trying to do because it wasn't working, and just watch what you do or what you all do.
Absolutely.
Fine. Yeah.
I'm going to tell you how I trade, and I'm going to let Khristine take over the webinar completely after I get finished explaining what I'll explain to you, because she has a very simplistic approach to it as well. And then you'll have this recording to be able to play once I get that rendered. I trade literally 100% like Q, like every single part of me. There's a lot of traders that have learned from Q, but they like to use other people's style. I trade 100% like Q. I use the same. I use everything. I use all the EMAs and stuff like that as well. I also have my own MA, because after you learn how to trade, you find other things that work for you. But for the most part, I like to keep my chart pretty clean. But then again, depending on how I feel for the day, I may make it messy. But when it comes to getting into the actual training at this point, answering your questions is identifying the setups. Is there's always going to be an opportunity to trade in the market. There's always going to be that. So, that's definitely something that you should always realize and always know. So going off of this pair right now, you have to identify where you are in the actual trend. So typically for me, I breeze at this. I don't look at it too long, but I typically look at the monthly time frame first to see where I'm at, to see what's going on, see what possible setups I could possibly be getting myself into. Where could the market possibly go? What's going on this particular time frame? If I were to put stuff on this chart, which I do sometimes and sometimes I don't, because it's like this is a bigger time frame. This is like literally the highest time frame that I go to. So it's like this stuff is going to take months to even get to when it comes to for this particular thing coming back to the trend line. It may take 6 months to a year to even get back down here. Who knows? Like all these candlesticks are a month. So. But looking at where the direction of the market is going right now, I know that right now we're obviously heading up to some type of, buy or maybe even looking at what's going on the left side. The left side gives you clues where we're in an area that is pretty important at this particular time frame for this pair, being that the market was over here in the left, on the left over here, and it rejected literally 1, 2, 3, 4, 5 times. There was 5 months back in the past where it tried to come up here and it failed to stay up here. Right now, we're entering back into this market. In previous months, it did come up here, but there was still some type of rejection. Go ahead and kind of zoom in a little bit better on this so that you can see. These months were rejection and these months came in, but there was still nothing too strong to keep it inside of this particular zone. And the way that I draw my zones is I find a cluster of wicks, and I typically draw from the top of the wick to the top of the body of where the area is in the cluster. So this is the top part of whatever's in this cluster. So I put it right here at the top of this particular body, top of this wick, because it's the tallest one, and I just draw it across. That's how I draw my zones. In the most recent 3.0 webinar that Q did, he actually did it exactly how I did. And I, as far as I know, I never learned that from him. I just figured that out, on my own stuff. But it was pretty unique to see him draw the exactly the same way that I did. So that made me feel good about myself. But what this also means is I have something. Like I found something that actually works for me, because if I'm looking at a zone and it rejects from the way that I draw the zone, like if the market comes way up here in wicks and it doesn't wick above this particular price, then that lets me know that this thing is going to literally go back and reject, and I'll be looking for sales at that point. So everything is a case-by-case scenario. You have to just kind of figure out what case you're looking at right now. So for right now, with this particular month that we're in, I'm not sure if this is updated to the first or not, because this looks like a candle that's already been, volumized through for this particular month. But this may be the month of December, and I'm looking at the crosshair here, and it looks like December 18th. So this will be the month of December, a candle. So for the whole month of December, we were bullish. We were very bullish for this whole entire month. And so that means that we were in a lot of buys. And if you were to go down to a 4-hour time frame and look at how that played out, and you can look and see that obviously this thing is going up, nothing but up. Right? Just the whole trend is going nothing but up here. But to be able to really zoom out, let me see. Maybe I should go to a daily time frame here.
Yeah.
Looking at the daily time frame, overall, I can draw a trend line, and it's just going to go upwards. As you can see, if I just drew it there, it's just moving up. Everything's going up. You see some downtrends come into the market, which that's going to happen because the market's just not going to shoot straight up. But you see overall that's an uptrend. So with that being said, on the monthly time frame, I see that. So I should tailor my actions going down to smaller time frames, knowing that the majority of the trades that I should be getting in, the majority of them are going to be buys. So that's the first thing is analyzing that monthly chart. Now we go to the weekly chart, and keeping the zone up. If you want to keep the zone up, you don't have to, but just know that this is an important area where a lot of stuff can start to turn around. And so now that we're looking at a smaller time frame, it makes more noise come into the market, but you can kind of also tailor your case to, okay, what happened in the past. We want to look at the most relevant information because that's the most important. This is the weekly time frame. All of this is weeks. We don't want to go way over here. Even though it's important, we want to look at the most recent information, which is going to be all of this information, all of that information. So if we see that the market here at this particular time in the year It came inside of the zone that we have on a monthly time frame, and it rejected again. So now we're back at this level again. We still need to kind of build our case to say, is it going to break this particular price point? Is it going to go higher? Are we going to be looking at a higher high at this point, or are we going to be looking at a transition to go back down towards a sell? You know, and so at this point, for me, if I didn't have this other zone, so I actually I'll delete this zone here so that I can make this point. I'll draw another zone, you know, because this is a smaller time frame, and I'll look at, you know, what possibly is going to go on here. And I'll draw it like that, and I'll move it across. And so if it rejected once, my initial thoughts for me is it's going to reject again until proven wrong. So meaning that when it proves myself wrong, and then I'll be able to say that there was a candlestick that had completed above this particular zone. Being that there's no price, there's no candlestick wick or price that has completed above this top wick right there at that point. That would be a point that I need to see something come up here, not a wick, but an actual close of a body. And that lets me know, okay, maybe the price is going to go a little bit higher. So, but right now I'm still thinking buy, but also in this particular area on smaller time frames, I may be looking for a sell setup, knowing that this is a zone, a supply zone, and knowing that typically when you have supply zones based off my back testings, you're going to have some type of rejection. So now that I have that on there, I'm going to go down to my daily time frame. I still see that we're on the buyer's candle. So I'm still, you know, I could be looking at a short-term buys, but overall just some type of rejection. You see more details now, and you're looking at, okay, structure went up there. We have somewhat of a higher low. We have a repeat high. Then we have a break of structure. This could be a full retest at this point. You know, you have to kind of tune out the market and really see what the market's trying to tell you. Ultimately, since we're really in this zone, I wouldn't be getting into any more buys at this point, me personally, because with this candle here on a daily time frame, this was one day that was very bullish, but it had a lot of rejection right here. So this there's a candle wick on the top, which is this is buyer's exhaustion. You know, so then we have the next candle that's a bearish candle that the bears started to come into the market, but they were ultimately, you know, there was some rejection from the seller side. So it's kind of like indecisive. Then our very next candle, a lot more sellers came and tried to push the market down more. Ultimately, right now where we are the buyers is winning right now. So like I said, it could be short-term buys, but it's nothing long-term until it breaks above this particular zone. If it breaks above this, I will be looking to get into a buy, me personally. Now breaking it down to a 4-hour time frame, you have to kind of look at all time frame, all the major time frames, your monthly, your weekly, your daily, your 4-hour, 1 hour, 30-minute, and 15 at the least for me. You look at these time frames to see what the market is telling you. So when it looks at structure, identifying where you are in a trend, I typically like to draw this first to kind of set my eyes on what I see in the market. Even though you see zigzags here, you have to tune out the market. You know, what is this actually telling you? So this right here was a high, and then this was a higher low for me. We made a higher high at this particular point, and based off what the market is giving me, this is a clear higher low. So at this point, I'm looking for a what to come into play, another higher high. You know, if it doesn't make a higher high, then I know that now we're probably going to make a lower high, which is probably where, you know, where the market is presenting itself to be right now. Hold on 1 second. So right now we're pretty much, if the market were to stop here and give me a bearish engulfing pattern, I would be looking at this being a lower high and ultimately breaking structure, coming back to retest at some point. I'm getting to an entry right there. Stop loss will be above maybe the zone, because I know that nothing's been passed here, and I'm looking to sell this thing all the way down to some type of low, you know, and just keep my trade in. No matter how long it takes, it's going to come down here to some point, because this is where, if it breaks structure, this is where it's heading. There's no other way to go.
The word structure there, right here.
I'm gonna label the structure that I see. This is what I see for the structure here. So this would be the low for me. That would be the low. That would be a higher low. This right here would be the higher high. And this right here would be the higher low for me again. And as you see, the market came up for a little dip and then retested the low, but it didn't break below. So that still is a strong low for me. Then we made another significant higher high right here. And if you even want to tune that out, this would be the high. But for me, this is significant for me. So that would be my high. And this would be another higher low at this point. And if you look to the left, this was also a low that tried to come in there. And this low never broke below this particular area as well. For me, honestly, if I see something like that, this is what I typically would do. I draw a zone just like that. And I'd go ahead, with this being the very lowest point of this zone, this right here, this market has to come down and break below this zone for me to think that I'm going to sell. Does that make sense? Do you get what I'm saying? Okay. And with this being the lowest point of that wick and this being my zone that I set, this literally has to come below. Then I'm going to look to sell, because after it breaks, I'm going to need to retest, and then I'll get in for an entry and put my stop loss below that high. And then so now we go up to the next high that's significantly made. You want to look for the significant highs and the significant lows. That means you actually have to see some type of a dip. If you see something like this right here, this is really not like a dip. Like this stuff here, it goes up and goes down, yes. And on lower time frames, these are significant dips. But on this time frame, being that this is the 4 hour, this is not significant enough for me to say this is a higher low. So I wouldn't put this necessarily, like a structure point there. Though you could, if it just depends on you. Everybody's going to trade differently. Everybody's going to see the market differently. But this is just how I see it. So this right here being the most recent low, that's my new low that needs to be broken. So if the market breaks below this low, then I'm confidently looking for some type of sell entry. After the buyers come back into the market, I'm gonna need the sellers to then overtake. And once they do, I'm in that trade for a sell. But again, we're still on the 4 hour time frame. So I'm gonna keep these lines up here just for training purposes here. And then let's break it down to another time frame. So now I know, so as we're going down from the monthly time frame to the daily to now the 4 hour, all the things that I've said to myself is the monthly time frame is bullish. So I should possibly be looking for buys. I'm also right in the area where I am in a monthly time frame zone, supply zone. So it could be some type of major rejection. From the weekly time frame, I see that I'm still looking for some type of buy, but I'm approaching that area right now. This zone that we have up here is the weekly time frame zone that we drew. So now we're in a weekly time frame supply zone, which again for me is going to tell me that even though I have some buyers, market pressure, some bullish momentum. That's what it is. Some bullish momentum on the monthly time frame and the weekly time frame. I still may be at a point to where the market is gonna then reverse on me. So I need to be cognizant of the buys. And if I'm in a buy, it may be very, very, very short term based off of where I am in the market. So that's the case that I have so far for the monthly time frame to the weekly time frame. When I went to the daily time frame, again, I'm still in this zone, and I see that, yes, I'm I could be looking for some buys, but ultimately I'm really thinking sell at this point. So now I'm on a 4 hour time frame. I'm looking now at what the market is giving me, looking at structure now at this point, because that's when the 4 hour time frame for me is the time frame that I do my structure. My major structure for me is done on the 4 hour. If I can't see it on the 4 hour, then I may go up one more time frame to the daily time frame. But that's me. But I typically do all of my analysis, like major analysis, on the 4 hour time frame. I love the weekly to give a bigger picture as well. The monthly is great too, but I love the 4 hour and typically the daily. So, but for me, these are where my structure points are. So now I'm on the 4 hour. So now I go down to my next time frame, which is going to be the 1 hour for me. And I look at more data. Obviously, it gets a little bit more noisy. And of course, like I said, on lower time frames, you can see more areas of the structure made some significant dips. So now, if I had to do structure on this time frame, I may be looking at putting something there, some maybe there at that point, because these are significant areas. But that's if I was looking at long, short-term trading, maybe intraday trading at that point. So now this particular low, because obviously there was some support here. You cannot deny that there was support there. So this is a low for me. And then I come up here for a high. Then we have another low right around that area. And we have a high, then we have, to me, that would be a low. And then this right here, all this area tried to break this low, but it never really stuck. Like all this stuff here is not telling me that it broke the level. Though if you were in a trade, this probably would have scared you, just to be honest, because the market sometimes does that. We can't control how exotic it kind of moves, because this was a counter that kind of would have faked a lot of people out and think that it's going to go down. But then ultimately ended up being a bullish engulfing pattern or some type of variation, and then you could have stayed in your trade by not getting scared. And this is why you have to sometimes zoom out your picture to see what's really going on the higher time frames, to then say, hey, I shouldn't have gotten out of my trade, or I should stay in my trade and not get scared of where the market is going. But anyways, going to the most relevant action for me, looking at the chart and what's going on, for me, I would have actually put a low point right here. And I'll tell you why here, because this is a significant dip for me. So this would have been my low on this particular time frame. Now you'll have different lows on different time frames, but this is my low here. And if you watch 3.0, I'm not sure if you watched any of the confluences and or if you're caught up. Q mentions the fact that the structure is going to break on the smaller time frames before it breaks on the higher time frames. So for me, the 1 hour time frame low for this time frame would be here. But for the 4 hour, it would actually be here. But knowing that this would be the 1 hour low, and it apparently looks on this time frame that this particular cluster of area where I would deem as a low on the 4 hour time frame would be a break of structure for this time frame. Does that make sense?
Mm-hmm.
Okay. Does it really make sense?
Yes.
Be honest with me.
Yes.
Okay.
Because you're on a different time frame now.
Mm-hmm, mm-hmm. So on this time frame, this right here would be my break of structure because I have more than one candle that is underneath the level of structure that I deem as structure. And since I know that structure is going to break on a 1 hour time frame before it breaks on a 4 hour time frame, I may be doing myself a solid by getting into a trade on a 1 hour time frame to set up myself for an overall 4 hour move. Hopefully that made sense when I said it. But now this is where if I'm right about that, if I'm right about this being a low, a clear low for me, and this right here being a break of structure, because this is where I would see it. If I had to draw the arrows for it, I would see that this is a high and this is a low. I would say that this goes up to this area being some like a common area of a lower high, which is also telling me the market is getting weaker. Then I would say that this is a break of structure because now it broke structure there. And on this time frame it is, and now we're make a retest. At this point, this is a full 100% retest, and I can then draw another zone right there to help my case to say that if anything passes this zone here, give me 1 second, make that a different color. If anything breaks above this zone, then I was wrong, or not necessarily wrong, but I just have to adjust to what the market is giving me. But I would say that if the market is going to break above this zone, being that this was the highest wick in this cluster that I deemed as something that's important to me, I need to go ahead and look for maybe possibly waiting for getting into a sell until the market shows me that it's ready to sell off again. But ultimately, I have this high over here on my radar, knowing that if it comes up here and passes this, then I know that I can possibly be looking for maybe a continuation of buys at least into the top of this current zone that I have for this particular weekly time frame that I do the zone on. But for me to look for a sell entry, I need for certain things to happen now. And I need some type of engulfing that is clear and significant for me. And I told you that if you have a break of structure, you wait for the retest, but the retest has to give you a clear signal to then get into the trade. All right. So when you look at this being the low and you start to see the buyers come back into the market, okay, what candle is then being engulfed for me to let me know that I can possibly get into a trade? This doesn't engulf, that doesn't engulf. Then we get another bullish candle. So this is the most recent candle that needs to be engulfed. This one right here, if you want to be very anal with it, this does engulf it, but it has a lot of wick on the top and the bottom side for it. So for me, that's a red flag. I would not get in for that entry because it has wicks on the bottom side and it has wicks on the top side, but it does clearly engulf just by a tad bit. That's not something that's clear. We want to look for those engulfings that look potentially like this right here. Like we want something like this, where you have a lot of body that's above the previous candle and you barely have any wick that's at the top or the bottom of it. That's something that I will be looking for to take.
So what does that candle mean there where you're pointing that it has almost equal wick on both on top and bottom?
Well, this candle simply means that during lower time frames, there was some type of consolidation and nothing clearly said that I would want it to buy or to sell. And so here's what I'm gonna do, because I will go down to these lower time frames anyways. I'm gonna put a line right here and a line right there, and I'm gonna tell you how this was consolidation in between this time frame. And I'm gonna put let me see, let me go purple just to do something different here. All right, so in between this time, when I go down to a lower time frame, and I'm gonna even kind of box this in if I can. And I'll show you that was at some point that was consolidation. Now, ultimately, in this area right here where this wick shows up for this bullish candle, that's when we had our breakout. Mm-hmm. We had a retest, and then we had a movement up. So this is literally what it looked like. I'm gonna put this candle right here, and this is all gonna show up in a lower time frame when I go to it. The market literally went up, and it went down, and it went back up again. Just like that. It literally was a break and a retest of the consolidation. Just like that. That's what it's going to look like. So on this time frame, looking for the perfect area to enter now. I'm waiting for the perfect engulfing for me to make me happy. This was then another bullish candle that came into the market. This was a bullish candle that came into the market. And then this one was a bullish candle that came into the market. Now, this one right here, we really don't take, as far as what I was taught, Q says, really don't take these. This is considered, in my opinion, a doji, even though it's kind of like a spinning top. It has more body volume, but it's pretty much a doji to me. So I don't take these as something to take to engulf. Like I don't count these candlesticks to be engulfed. Does that make sense? Like I don't want this to be engulfed because it's not really much. It's not giving me much volume. Like if you want an engulfing, you want it to again look like this. This right here, this white candle that I'm pointing at, this candlestick has some substance to it, has a lot of volume in it. So if this right here were to get engulfed, I would be happier taking this trade because this right here engulfed a candle with some substance. That means that all the volume that came through in this candle, there was more volume on the buyer side to then overtake all the volume that this candle shows. So therefore, I'd be looking to buy for this particular time frame. All right. So this right here, I don't count that. So we just go ahead and move this particular candlestick out the way, and that leaves this candlestick right here to be engulfed again. So if I were to look at that as something that I would say, if the market doesn't pass this candlestick, then I'm not going to get into any trade at all. If it doesn't pass this, I'm not going to get into any trade for a sale, that is. So I needed to pass this, retest, and then I'm getting into an entry. If it doesn't, I'm still looking for the very next candle that needs to be engulfed. And from what it looks like, this is a buyer's candle for the current time frame, which is literally about to end right now, which is going to be literally in a minute, it's going to have another candle print because we're on a 1 hour time frame. It's about to be 12 my time. This simply means that, okay, now I have another candlestick to kind of help my case out now. So this tells me now that if there was not enough bullish momentum to pass this white candle, that means that we're getting weaker now on this particular trend based off the most recent candle. Does that make sense?
Yeah.
Okay. So as I break it down more, and all we're doing is this is multiple time frame correlation. This is getting to know every time frame to then build your case enough to then say I need to get into my sell at this point. And if we were looking at this time frame, being that this time frame has a 30-minute candle that actually engulfed a candlestick with some substance, to me, does this make sense? This is substance now. You see how this is a bigger candlestick than the other one I was showing you? This would be a candlestick that I would look at and say that if it engulfs this candle, then I may be looking in for a sell. So technically on this time frame, being that it entered my zone, knowing that this is an area I'm looking for rejection from, I'm going to then look at an aggressive trade at this point. This would be an aggressive trade. I would be looking at a sell for this trade, and I'd put my stop loss safely if I had, depending on how far this is on this time frame, maybe up here to really be safe, but maybe below or the top of this zone that I deemed as something that was important recently. But this will be an aggressive trade, okay? The reason why I say it's aggressive is because no actual structure has been broken. So you would be getting into a sell here, knowing that you knew structure's been broken on a higher time frame, but for this time frame right here, I'm looking for this structure to be broken on this time frame back in the direction of where I see the market going. Does that make sense? So,
okay, yeah. Now that small bullish candle, has it closed or is the last candle
right
the
here?
last one there up here to your right? Yeah. So has that candle closed? Yeah, right. That one.
This one right here would be a doji, and yes, it did close because we now are on a new candlestick now. This has been we're 1 minute in to the next 30-minute segment, and we're already going that direction. Right.
So because of that large white candle, you've made a determination already that it's going to be a sell, knowing that bullish little one has not closed yet?
So to understand your question, or to get my point across for this, if I'm looking at, so think about the case that we have already set up. So if we go back to the 4 hour time frame, another 1 hour, I think we looked at the 1 hour. So on the 1 hour time frame, let me show it to you this way. Hold on one second. We'll go to 1 hour. All right, so okay. So what I'm doing here is I'm gonna split up the screen so you'll be able to actually see the 1 hour. On the right side, we have the 1 hour chart, and on the left side, we have the 30-minute chart, okay?
Right.
on the 1 hour time frame, if you remember me stating the structure point, I said, okay, this is where we can label our structure. This is where we can look at it and kind of see where we're, we got to tune out the noise, because all this stuff, this wicks and sideways candles, we got to tune that out. All right. So I'm going to start here at this high, and that's going to be a high for me. And I'm going to then tune out all this noise, and this is going to be a low, right?
Right.
This is going to be a lower high at this point, and then boom, this is going to be a new lower low. When I say new, because the trend that we were in before going to lows would be an uptrend. Like we were in an uptrend this whole time until the structure broke, because this was the most recent significant point of structure that I needed to break in order for the structure to then be a downtrend, because we're going from uptrend to now being downtrend. And so when I break structure, being that this area here was the point that broke structure for me, and as you see over here, this shows up on the 30-minute time frame as well. This was the point that broke structure for me. So now we're looking at a retest. So once it retests, now we look for something significant to tell us we need to get in for a sell. All right. So the thing that we deemed on the 1 hour time frame was that this particular high over here that I deemed as a high, as we see this arrow right here. What is the 1 hour time frame? So we see this arrow right here, right? Let me show. This was an area that I deemed was that particular high, but it's also all in this particular area here was like sideways movement, but it was nothing but rejection. We see rejection here, wick, all this cluster of rejection together, I deemed as a lower high. Does that make sense? Okay. Now, from deeming this as a lower high, I then stretched out the market and drew a zone. And I said, if the market comes back to this zone, that for me builds a case of where I can start to look for my sell, knowing that I deemed there was a structure break on the 1 hour time frame. Does that make sense?
Right.
Because if the structure broke from uptrend, then the only other way that it's going to go, if it's not an uptrend anymore, it's then going to become a downtrend from that point. Because uptrend structure makes higher highs and higher lows. But the moment that the structure doesn't make another higher high, because this was the most recent high for this structure. This is the 1 hour time frame. This is the most recent high on the 1 hour time frame. And then we made a higher low. This is great. That's following structure. But the market decided not to make another higher high, because if it did, it would have went way up here on the 1 hour time frame. So do you see how this high over here looks on the 30-minute time frame? That means that it's this high should have came way up here on the 30-minute time frame, but it didn't. Instead, we made a lower high on the 1 hour time frame, equally on the 30-minute time frame. Then we made a lower low. So that means at this point right here that we deemed as the most recent higher low on the 1 hour time frame, it's now the point that was broken, which means now we have structure broke. We have a breaking structure. So after the structure breaks, if you remember the famous diagram that Q draws, and it goes like this. If you have an uptrend, it'll go like that. Make a high, a low, high, low, and it goes like this. It breaks the structure. It comes back and retests, and it goes back down just like that. And so us to be able to label these highs, I changed the whole color there. Let me see. But to be able to label these things, let me just get something else. This was a low right there. This was another low right there. And this was the most recent low for this timeline. And to be able to draw this trend line and then connect the dots and tell you that anything above this trend line is a buyer's market, meaning that we're looking for buys. Anything below is sales. Does that make sense? Okay.
Yeah.
So at this point, if I were to, let me get a different color here. If I were to, keep getting the same colors here. If I were to actually draw something, if this was my most recent higher low in the uptrend, and this point right here was broken, we're then looking for a lower low to be made first, AKA this, okay? Then we're looking for the buyers to come back into the market for a retest, because there's no retest, there's no entry, right? Okay, that's what Q says, no retest, no entry. So by the time that the buyers get done retesting in the exact same vicinity of the area where the structure broke, typically is where the market may stop. Does it do it every time? It doesn't. But typically is where the market may stop, because right here, most likely there's some type of zone that I can create. I can create a zone here and say, hey, it's rejected there, broke through, it's going to retest, and actually going to stop there. All right? So same thing is boom. If the structure broke there, I could be looking for my first area to stop right there. Then I'm looking for a bearish engulfing pattern to come into the market, because that's what I'm looking for, because a bearish engulfing pattern signifies that we're ready to sell. Does that make sense?
Yes. I'm understanding the time frame correlation now from the 4 hour to the 1 hour, how structure broke from the 4 hour to the 1 hour, then went back and retested the structure from the 4 hour, which is where you currently are, right?
Absolutely. I'm going to be able to make it simplified this way. If you can, you have your notebook with you?
Yes.
Okay, go ahead and draw this for me. Give me 1 second. Draw something here for you. So if I'm not going to be by my, you might not see my face the correct way, but I'm going to draw this here for you. So we're going to do it this way. Now, this is really going to make sense for you. I kid you not, it's going to really make a lot of sense. Do it this way here. Let's go. I'm going to just draw daily time frame. TF is time frame to 15-minute time frame structure. And what I'm going to do is, all right, so this figure that I draw, I want you to draw this exactly how I do it. If you have multiple colors or that you can use, great. If you don't beat yourself up about it, but I'm about to do this here. This is what daily time frame looks like. Okay. I want you just to draw it exactly the same way. If you can do it, draw the exact same way that I drew that. Let me know when you're done.
Yeah, I'm done.
Okay. So what we're going to do here is just quickly label this. We already know this is a high. This is a low. This is a higher high. This is a higher low. This is a higher high. This is a higher low. This is a repeat high. So we're just going to put H right there. And then we're going to have a lower low. Then we're going to have a lower high. And right here, what we're expecting is an expected lower low. Okay. Got that?
Yes.
What I'm going to do is now, and let me put this, so we'll just put blue. Hold on a second. For me, you'll have this on the webinar, but we'll put blue. This is going to be the daily time frame. And I'm going to wrap it up after this, and then we'll let Khristine go here for a second, okay?
Okay.
All right. And then, so that's the daily time frame. Here, the green for me is going to be the 4 hour time frame, okay? This is what the structure is going to look like, okay? All right. So we're typically going to have this here. Now, if you can do this as close as possible, I know this may be kind of hard with me drawing all this stuff here, but you're going to get what I'm trying to say here in a second. Okay. And I'm going to make a very strong point when I'm done with this. But now I know that's kind of gibberish. If you can do at least some of this the right way, then that's all that matters. Because really all you need is one leg. One leg of information is going to tell you what point I'm trying to make here in just a second. And I'll actually finish everything off in this one leg to tell you, how things are going to work. So that's that. Let me see. I'm going to go black now. So the black is going to be my 1 hour. Okay. So I'm just put a little circle here. It's going to be 1 hour. If you want to differentiate, maybe you can do zigzags or something like that to kind of give you the structure, but I'll do it that way to show you what I mean. So inside the 4 hour time frame, so what you see here in the daily time frame is that the 4 hour time frame has its own structure as well. Okay, you see that? All right. Let me see if I can. Hold on 1 second. I did that too much now. Hold on. Undo. Hold on 1 second. Perfect. All right, that's enough. So inside the 4 hour time frame is going to be, let me catch up. Hold on 1 second. I'm going to just do this one leg because I think it messed up here. All right, I'm getting used to this thing here. So I have one move. That's the daily time frame. The 4 hours, the green. And we got this here. This is just one leg, okay? And I'm gonna show you here on the charts, and then we'll let Khristine go. And all right, so that was the daily time frame and the 4-hour time frame. What you see is structure everywhere. All right.
Right.
Now, 1 hour time frame, inside of the 4-hour time frame, you're gonna have its own structure. And I chose the wrong color, but you're gonna have its own. Let's see, there we go. Have its own structure. Okay. But overall, even though you're seeing all these zigzags on the 1 hour time frame, we're still in an overall move up on the daily time frame. Does that make sense?
Yes. And the only question I have is on the 1 hour, how do you know how many highs and lower highs that's in that one leg?
Well, that's where you have to correlate the higher time frames to see where something may stop. Ultimately,
okay.
And I'll show you what this looks like on the charts as well. And I'll get the last but not least, I'll just do like a 15-minute time frame with this little colorful red. We'll do 15-minute. All right, it's changing the color, but so what we're gonna do inside the 1 hour, it's gonna look real small, but I'll try to zoom it in. Inside of the 1 hour, we're gonna have structure there as well. And all the while, inside of this structure is inside of the 1 hour, is inside of the 4 hour, and ultimately is inside of the daily. Does that make sense? All of this moving up and moving.
Nice color scheme.
Exactly. Yeah, but yeah, I shouldn't did that. But anyways, now I'm gonna show you what I mean here. So now we're gonna go to the charts, and I'm gonna break this down very simplistically, and this will be the last part before Khristine gets on. Let me see. I'm gonna clear off everything on this chart, and all we're doing at this point is looking for a area to sell. I think I still got this chart on. Go here. All right. So ultimately, just to give you the example of what I'm looking for here, for that I would be entering for a sale there, and I'd get in. I put my stop loss right about there because this is what the market is telling me that this is good. This would be an aggressive entry. I would be getting in for a sale there. My stop loss would be there, or if I want to wait for something safe, I would be going there. In this area where I showed you was consolidation, let me go down real quick to like a 5 minute and I'll show you. Do you see how if I extend this here, right there and right there, that all of this is consolidation, right? It's just moving sideways, not really. Once you had a breakout, which I said was right here, which we can see is going to be this particular area, came down, retest with a bullish engulfing pattern, and it broke out of that particular zone to create another zone, which we're currently in right now, that the market is not going any higher in. All right. We have another very strong bearish engulfing pattern on this 5 minute time frame. So we're now looking for me, if I were looking at this, tune out all the noise, I'm looking at this strong, I'm looking at structure like probably right there at least for me, being for me tuning out all the noise, but saying this was the first level that was established as structure for me. Even though we're kind of doing all of this, you have to tune out the noise. And what's significant for you, you have to be the one to kind of tell yourself that. So all I'm simply looking for then at this point is a break of this particular level to be safe for me. This is a safe entry, a retest right there, and then a continuation down. Stop loss below the high, but I know that I'm already in the zone up here. But anyways, to give you the example of what I was showing here on the charts, on the one note here, I'll go to the daily time frame. All we're going to focus on is one leg, just one leg. All right, so I'm going to highlight that leg. It's going to be really good.
It's a clean leg.
It's so clean, so clean. This is that one leg. All right, so inside this one leg, I'm going to, color is that? Yes, this is perfect. I'm going to show you this. This was a low, right? Way up here to make a high. Do you agree? Okay. Then we made a significant low right here. Do you agree?
Right.
Before I go further, do you see how this low right here is synonymous with the low that's right, or the high that's right there? Do you see that? If I were to draw a flat line, like right about there to get the common area of all these wicks in this cluster of area, do you see how this was a lower high that actually broke structure and then retested at the same area? Did I not just say that if the structure break, that you typically would be looking for an entry around the same area of the structure that it broke? You remember me saying that?
Right.
But you have to be able to see that, you know. So if we're looking at structure on this time frame, this right here would have been a significant lower high for me. This would have been a significant lower low. this would have been a high. Since it passed this high, that means that we're no longer making lower lows, because technically how structure is supposed to work is right when it gets to this area, it's supposed to then go back lower. It did not do that. It went higher, and that's why we have a structure break, and that's why we were ultimately in buys. So you have to build a case around the structure. Structure is the most important thing. I tell my students, structure is king. You know, structure is key, structure is king. So anyways, let's see, get back off of that. So now when you do that, that's a significant low. So now we have to deem what's our significant high. Even though there's a wick right here, I still say this is the highest point at this time in the market. So that's my high. Make sense? All right, so that's yellow. What we're going to do now is change the color of our arrow to like an orange. I did that strategically, by the way. And now we're going to zoom out and be able to now see the structure on a 4-hour time frame. For some of the part, it may look the same. You know, you really can't help that. So right here, this is a low for me. I'm going to deem this particular area right here as a high. Do you agree? Like right here where I'm at?
Yes.
All right, let me zoom in as close as I can to really show you why I went there. So right here, there was a high that had a little type of a pullback, because ultimately we were looking at nothing but buyers candles, Then we went up here and made this white candle came in. So then it started some type of retracement. It was a very minor retracement, but it still is structured to me. So for me, I'm going to say that this is going to be my significant high there. And then I'm going to say that temporarily, we then found a level of structure there, which is support. We did find support there. And ultimately, structure didn't break, because if I put a line here, there's nothing that really breaks below this to tell me the market's going to go down lower. And so you see how right here where this yellow arrow is a higher low for me on the daily time frame. Remember me, because I did the yellow on the daily time frame. This was on the daily time frame. This was my higher low. On the 4-hour time frame, this is still going to be a repeat low, but it's also structure points for me on the 4-hour time frame. Does that make sense? Are you really understanding that? Like the mindset? Yes. Okay. Then for me, again, we make a high that's going to be at the same point that the daily time frame is a high for me. So that's significant for me. Then we're going to go down, I would tune out all the noise here, and I would go ahead and make a low right there. So that low is synonymous with the daily time frame low. So that's how that's why it's called multiple time frame correlation. Before the daily time frame made the low, the 4-hour time frame had to make the low first. Does that make sense?
Right.
So then from here, I go here. That is a significant high for me. And then we go down here to make a significant low again, which is still on the same level, which means that this is now established as a low on a daily time frame, because you have a double bottom on the 4-hour, which typically is going to end up being a low on the daily time frame. Okay. So then we have another high. At this point, if we were looking at this being a minor counter trend, if we were looking for an area to get in, what I typically would do, because I see this clean as day, I draw a zone right here, because that was structured for me. I just told you, literally, that this was a high for me, and this temporarily was a pullback, like some type of a downtrend, and it made a high, then it made another low, but then it broke past this level of structure for me. And then anything that breaks, we typically have a retest. So it breaks above, comes back and retests. Now all I'm looking for is a bullish variation at this point. And I'm just giving you another way to look for entries at this point. So if I see that, if it breaks past a certain area, I'm looking for the retest, and the retest is the opposite color of the candles that I'm looking for. So if I'm in a buyer's market, the retest for me would be the seller's candles, meaning the white candles for me. Does that make sense? You following me? Okay, so I would look at this being the first candle that came in that was white. So if this was the first candle and I didn't see nothing else, I'm going to show you right here. If I didn't see nothing else coming to the market, hold on. If it'll let me do it, it's probably not. But yeah, so anyways, this will be the first candle for me that I would need to be engulfed. I think it's going to do it now. All right, so do you see how the market right here, this presented the first white candle for me right here at this point in time? Does it make sense? So I need this candle right here to pass, to be engulfed, for me to then look and say, hey, I'm going to get in for a buy. And if it does engulf, I'm going to put my stop loss maybe below here, below the zone, because this right here used to be structured. Or if I wanted to be really safe, I'd put it below the low. Make sense? So all I'm looking for now is a buyer's, like a bullish engulfing pattern. So I'm going to press play, and as soon as I get that bullish engulfing pattern or variation, I'm going to take that buy. Boom, we got another white candle. I'm not taking that for a buy because now the market is still telling me that it's not ready to go. Does that make sense?
Yeah, but it still hasn't broken structure yet.
Exactly. Well, it broke structure, but we're waiting for the retest, the entry. So it broke structure for the downtrend that was temporary. Like I want you to be able to really understand where we are right now in the market. So let me backtrack because I want to make sure you get it. So on the daily time frame, we have the not the white, but the yellow arrows, right?
Mm-hmm.
And so with the yellow arrows, if you tune it out, try to see the yellow arrows. I know you see a lot of different colors here, but try to see the yellow arrows. We got a high there, we got a low there, we got to have an expected higher high that's coming, correct?
Right.
On the 4-hour time frame, we have the orange arrows, which I say was a high right here. We had a low and we had a high. Then for me, this was a low there, but then we had a lower high. Then we had a repeat low. So typically, if the market was right there for this time frame on the 4-hour time frame, and it had a repeat low, that means that there was some type of slowdown, pretty much, that was in the market, because it didn't immediately make a higher high. It made a lower high right here. Because if this was the high for me, and the market made a lower low, and what the market was giving me was a lower high, that means the market struggled a little bit. You know, it struggled to make the high because it technically, this right here, let me see if I can grab the right error. This right here should have been way up here to make a higher high. But instead, it made a lower high right here, which told me that there was a slowdown in the market, which you could have taken advantage of on smaller time frames. So you have to play with what the market gives you, but you overall have to see what the higher time frames are telling you. Okay, so all the while on the 4-hour time frame, even though you see a slowdown, if you deem this as structure, which for me it is, you deem this as a lower high on the 4-hour time frame, we still have to ask ourselves, where are we on the higher time frame? Okay, so if this was a lower high and the market made a repeat low but did not go any further, I'm not really looking for sales at that point, unless it goes further than that. Because that will be structure for me. Because overall, I know that the market on a daily time frame, because before all of this happened right here, we're still on a daily time frame pullback. Does that make sense? Because this right here was a daily time frame pullback, the yellow arrow. Okay. So we're on a seller's, we're just on a pullback. So when you pull back, that's the different trend. We're on a seller's trend right here during the daily time frame. So of course, on a 4-hour time frame, we have to match up with what the daily time frame is telling us. Okay. So then if we make a low significantly on the daily time frame, then what else is next? So because if it's an uptrend that we're in and we create a higher low at that point, we're looking now for a higher high. So now we need structure to break back up into our favor, because after the market pulls back on the daily time frame, aka a seller's momentum trend, a seller's pullback, we now need a buyer's momentum continuation. All right. So we have a seller's move here, and we're waiting for the buyer's move to come in. But ultimately, if we're in the seller's market for the daily time frame pullback, structure has to then break back into buyer's momentum. Does that make sense? Okay. Go ahead.
Okay. No, I'm looking at structure from the daily. This is what I'm following. And the 4-hour and the 1 hour is still following the structure from the daily. Okay. So long as it has not broken the daily structure at the bottom, no matter what's going on top of that, that's just noise, because structure has not been broken yet. That's
correct. That's actually
correct.
Yeah.
I have to watch it a few times, but I'll get it.
I know you will. And that's why I love the fact that this is recorded, because you're going to be able to look at this multiple times and say, okay, I get what he was saying. I didn't get it the first time, really, but I now get it now that I watch this replay. So now at this point, looking on, I never enter on the 4-hour, by the way. I never enter on the 4-hour, but based off this time frame, here's where I would enter. All I'm looking for now is a trend continuation trade to support the overall bigger picture that I see. Does that make sense?
Okay. So where we currently are now, it has not broken that structure, that small candle, that small white candle. If it breaks below your zone, then it'll have to retest to be a sell.
Technically, yes, but ultimately, we're looking for we already know that we're in an uptrend. Like the only trade we're looking for is a buy trade. That's the only trade we're looking for. The only way that we're looking for a sell to be confirmed, because even if it does come back down here and dip, let's say it comes right here, and let's say this white candle comes right here, and then you see some type of pullback to come to this particular zone, and it stops right here, and it actually is in competition with this. Then we're looking for this right here to happen. That's all we're looking for. That's when we would really be looking for a sale. But safely, to give you this safely, what we're looking for to be a confirmed sale is to break below the support, because that's what the major support is. We only want to look for the most significant areas of support. So the structure that was already broken was right here. This was the most. Let me see if I can make it easy. I'm trying to make this as easy as possible for you. This right here, this circle that I just drew right here, that was the most recent lower high in this daily time frame pullback, because we're still looking at the yellow arrow here, right? Daily time frame pullback. This right here was the most recent lower high for this time frame pullback, the daily time frame pullback. Therefore, right when the market made this big blue candle, right? Follow me. This big blue candle. This candle was the candle that broke the structure. Does that make sense? This candle here broke the structure. All right. So now that the candle, the structure was broken, all we're looking for now is what?
Retest.
Yes, exactly. Perfect. So you got it. So now when we find the retest, then what are we going to look for?
Touch the zone and then go up.
Yeah. So I was looking for an answer. So we're looking for a bullish engulfing pattern at that point.
Yeah, okay.
Does that make sense? Because if we have a retest, then we look for the entry. Because if there's no retest, there is no entry. So now that we got the retest, go ahead.
On the entry, is it always a bullish engulfing or bearish engulfing candle?
Depending on what trend you're in, we know that we're looking for a buyer's move. So we're now going to be looking for a bullish engulfing pattern or a bullish variation. Does that make sense?
On the 4-hour time frame.
If we were entering on the 4-hour time frame, yes. I'm not advising you. I'm just doing this for simply, practice purposes. But I recommend you enter on the time frame that makes you the most comfortable. For me, that's the 15 minute. If you're comfortable with entering on a 1-hour time frame, enter on a 1 hour. If you comfortable, I wouldn't take it no higher than maybe the 1 hour, to be honest, because at that point you're looking at large stop losses, and you don't want to lose that much money if you're wrong. Because if you enter it on a daily time frame based off of a daily bullish engulfing pattern, that bullish engulfing pattern could be ridiculously long, and you can get over 100 pips over stop loss. So I wouldn't enter on any time frame higher than a 1 hour time frame. That would be the absolute max for me.
Okay.
All right. So now we're looking for, if we have the retest, we're looking for what?
An engulfing candle.
Of what kind? Bearish or bullish?
Bullish.
Okay. Now, why are we looking for a bullish engulfing pattern?
Because the overall trend is an uptrend.
Perfect. You got it. So now if we know that, boom, as soon as we get one, we're taking that trade. As soon as we get one. We already know the trend is there. We got another white candle. We're not taking it.
Right.
Okay. We got a blue candle, but it didn't engulf. We're not taking it. Right here at this very moment, boom, right there, we could say that engulfed, but to me, I'm not really seeing that much confirmation, even though it engulfed. I still see a lot of exhaustion here. For me, I needed to complete above this zone again for me, because as you see, the wick here tried to come above this zone, but it didn't. Does it make sense? This would be an aggressive entry if you were if you was very confident and you knew that it was obviously going to go up. Get into this trade anyways, because it does slightly engulf, but you put your stop loss way below here. Does that make sense? Okay.
Yes. Now that's about a 40 pip stop loss. So where's your TP?
Well,
the higher high to your left.
I'm gonna tell you here in a second. Now this is a 4-hour time frame, and I don't recommend entering on this time frame. So the stop loss is going to be higher here. And as you see, this is 103 pip stop loss. If I were on a standard lot, I'd potentially be losing $1,000 on one trade, and I don't want to do that. Right. Okay. That's why I say enter on the smaller time frames, because I could break this all the way down to our entry literally would probably be down here on a 15-minute, to be honest. Really, kid you not. But I'm not breaking it down that far. But technically, if we were entering on this time frame, yes, our stop loss would be at the the 100 pip range. if I was looking to just take profit at something comfortable for me, I'd be at this high right there. That would be my take profit. That's just me saying, okay, I don't want to stay in the market long. When it gets here, I'm out. I know it's going to be a good trade. The risk to reward is going to be there, because if that was 100 pips over stop loss, I should be looking at least 100 here. Okay, that's a 1-to-1 or a 1-to-2 or 1-to-1.5 at least. That's a basic average trade. 1-to-1 is basic average trade. When I say 1-to-1, that means that my risk to reward equals the same. That means I'm risking 100 pips and I can gain 100 pips. Does that make sense? Okay. So on a standard lot, that's a, however long it takes to get here, we're looking at $1,200 something, which is great. But that's if you want to take profit shortly. Now, the way Khristine is going to do things for you, she's going to really blow your mind with how many pips that she's able to catch. And I'm going to let her take over that here. And literally, I'm going to finish this up real quick. So now that could have been the entry, but for me, I'm waiting for another candle to give me some confirmation. All right. And right there, that would have been enough for me. It's completed above the zone. Right here, this bullish candle is completed above the zone, and it's literally giving me a bullish variation. So I'm good with taking that trade. And for me, now that I know that this is average, this is a good level of structure, I now can lower my risk and say that I'm gonna get in right here. And now my risk may be, let's just say 50 pips. We'll just put it at 50.
Now, preacher, that candle, it opened above the zone, but it closed right at the top of the zone. So is that considered a perfect entry? Because it closed at the top of the zone, not above. Oh, it closed above. Okay.
Yeah, for me, this would be a good entry for me. Now, I don't like how it looks because it does have wicks on both sides. But if I was anticipating the move, which is typically what we're going to do, because we don't know what the market's going to do, but I anticipate what's going to happen, I'm going to be happy with this particular entry. If I want to wait, if I entered on this time frame, knowing that it's a 4 hour, it took me 4 hours to even wait for this. So I'm going to be okay with taking this trade, knowing I had to wait a long time to get it. And I was being patient, knowing that the market, if I would have got in here, I would have had a little bit of drawdown. But even though it would have went back in my favor, it overall been a solid trade. So let's just see what the rest of the candles look like. We obviously know where it's going, so we know it's a good trade anyways. But let's see if we got in there. This is what would have happened. We would have had probably little to no drawdown, and ultimately we would have been already in profit based off of that confirmed entry. Now, it's still aggressive regardless, but it's still a confirmed entry for me. Entry on this candle rather than this candle. This candle would have been my entry. I immediately in profit. Where's my thing? Okay, then just letting it play out here, and obviously you'll see that it'll hit take profit up here because obviously we know where the market is going. But now you see this candle here. You have to know where you are. To be able to know. So I can stop this here. So to be able to get this entry here and to know that this candle here could have faked you out and say, okay, where's the market going? The only reason why you had major rejection here is you have to know where structure is. Okay, we have to know where we're overall. We have to know our overall move. Where are we in the market? Okay, so boom, we draw a zone there. We know that if it rejected here, it's probably going to reject there. But overall, I'm looking at major points of structure. This right here would have been structure for me. That means if it goes below this, I should get out of this buy. If I got in right here, and this market over here goes all the way down here, and it completes below, like with white candles, I'm wrong. Like I need to get out the market. I need to save myself, save my account, and get out this market. Does that make sense? But ultimately, I know if there is some rejection, it's only because that the market rejected right there. And that's why I typically like to draw zones, because if something goes against what I see, why is it going against what I see? You have to ask yourself, build a case around what's happening, okay? Now, to continue on the trade, I'm going to speed it up a bit so we can see. So I'm trying to let Khristine go. Let's see. Now we see that the market came right back in our favor, still going up right now. We see the candles play out. You have to be able to withstand what the market is giving you. Even with the long wicks, this is just a pair that overall, if you know the overall truck structure, it's going to go. And at that point, boom, take profit was hit, and it still kept going, and just really kept going. So overall, from this one entry, where did I get in at? What did I say? Let me see. Like right there would have been my entry. This would have been my entry. So it took a total of 2 days to hit your take profit, and you would have collected, 2 days and 8 hours, but you'd have been up $1,000, $1,000. If you kept your trade in because there's no reason to get out, in 2 days and 16 hours, you'd be up over 2,000. You see how the risk to reward is there? I only risked for my trade 50 pips, but my reward is 100, aka more than 200. So that's like a 1 to 3, 1 to 5 type of situation, and those are the trades that you really want to take. Okay.
Okay.
So now to end this off with the structure point, I'm going to go down to a 1 hour time frame now and show you. Now we saw the daily time frame, we saw the 4 hour structure, and as you break it down even more, you're going to see more noise, and so you have to figure out what the noise is going to mean to you. Find the most significant points. Let's see. Go to the red here. I'm gonna just do this. Lock. All right. You see how these points, I'm able to kind of tell what's the structure, what is the structure to me. You see, it's more noise now that you go out to the 1 hour time frame. All right.
Right.
Let me see here. Hold on. So as you see the red, I was playing with the red, and it's just more higher lows and more lows and more higher lows and more lows. You see how all that is just noise. You got to be able to tune it out the noise. And what do you truly see? Now, at this daily time frame pullback, this is where you also have to play structure. This is where you could have also been on this time frame to get an even earlier depiction of where the market was going to go. Let's see there. Okay, so now we see structure here at all types of ways. But overall, we have to know where the market is going. We just have to know all of that. So now that's pretty much it. So all of these zigzags and stuff are ultimately in one daily time frame move. Do you see that? The yellow count is the daily time frame. All right. So I pretty much, as far as what you were needing inside of this webinar, you've seen how I take an entry pretty much, which is waiting for structure to break. I wait for the retest. I wait for the pullback, and I wait for the signal. That's simply it. You look at structure. You determine what structure is. You wait for the breaker structure. You wait for the pullback, and by the pullback, depending on what trade that you're trying to get into, buy or sell, you look for the opposite move of the bearish or bullish engulfing pattern. So if it's a buy, you're looking for a buy. You wait for the structure to break into a buy. You wait for the seller's pullback. Then you wait for the buyer's market the buyer's market signal, which is going to be the bullish engulfing pattern. If it's a sell, we wait for the sell side to break. We wait for the buyer's pullback. Then we wait for the bearish engulfing pattern signal, which is going to be the bearish engulfing pattern, and take that trade. That's simply it. I'm going to let Khristine, she has a way of explaining the market that's really simplistic, even probably more simplistic than I have, but you'll have this whole webinar to kind of look at. So I'm going to stop sharing my screen. I'm going to let her take it. And she's going to blow your mind here. And I'm sorry, I took some.
Let me just see.
The whole webinar right
here. How do you feel right now, Pastor Ron, with what you just learned?
Pastor Ron, you hear that?
Yes. I'm sorry.
How do you feel about what you just learned? Like, what did you take from what Ricky showed you?
Very, very, very informative. To process that, it's got views, but it was very educational.
It's good. Okay.
It takes me to a place of where I wasn't, so that's a good thing.
It's good. Okay, so you're gonna see, like right now, that the way Ricky and I trade are completely polar opposite. You can see that I literally just have 2 lines on my chart in the zone. And so the way that I trade, how I start by trading is, again, knowing where I am in the overall market. So I like to look at the condition at where I'm at. And so usually you don't always have to mark up the monthly chart. Sometimes the monthly chart may be too blocky. Let me just erase all this stuff here. So I don't really know where I am in the market because it's just all I see is blocks. So I'm gonna scale down to the weekly chart now. And what I also like to use is a Heikin Ashi candle chart. That chart actually clears up a lot of noise.
Khristine.
Yeah.
Share your desktop. I think you're not sharing the actual desktop.
Can you see it?
I can see I see a semester, like it says
symmetric triangle. Yeah, that's what I see.
We don't see the chart. So like stop your screen share and then restart it and then your desktop.
Okay. Sorry.
You're fine. And then like just start over for us real quick if you don't mind.
Okay. Yeah, no worries. Okay. Do you see it now?
It is coming up. Give me 1 second. Perfect.
Yeah.
We do.
You can see
There
it
it
now.
is.
Okay, so you want to see what, okay, I'm going to restart what I just said. Okay. Again, as I said, the way Ricky and I trade are completely polar opposites. So he does a lot of zones, a lot of trend lines, but I just keep it simple. I actually just use probably like 2 or 3 trend lines and I call it a day.
Okay.
So what I usually like to do is I like to do a top-down analysis. So basically starting on the monthly chart. And so what I like to do is like, if it looks too blocky to me, I'm going to scale down to the weekly chart. And a way to basically clear up the noise is actually by using the Heikin Ashi candle chart. So that is this guy right here. And what I like to do is I actually like to use trend lines. So Ricky, his secret or his magic power is zones. What I like to use is trend lines, right? And so what I like to do is I like to do a top-down analysis from the monthly down to the daily chart just to get an overall bias of where I am in the market and bias and just the overall structure. So this is what I'm going to do. So I like to take my trend line here and mark the most significant points. Okay.
Feel free to ask questions when you have.
Ask questions on the way because I keep it very simple. You're gonna see in a moment how simple I keep it. So I'm on the weekly chart. So I'm just using my trend lines to mark the significant points in the market. So we see here we have a touch here. We have a second touch here. And I'm gonna take my trend line again and just draw my basically like my outer structure of the market. And so what I usually like to do is I like to trade patterns. And I am actually learning to, or I want to be more of like a long-term trader. So basically like a swing trader per se. Okay, so, right? So this is what I'm going to do. And then right now, this is the weekly chart. And this right now I'm on the Heikin Ashi channel chart. So you can clearly see how clean it is compared to me putting on a regular chart. You can see how it's really noisy. But if I put it to the Heikin Ashi candle chart, you can see how much more clarity. You can see actual structure, right?
Now, is this your platform? Is that TradingView also?
This is actually TradingView. Do you have TradingView?
I do, but I basically been using Trader's Way, MT4.
Yeah. So I would suggest that you would start to use TradingView because it's going to help you so much. There's so much tools. You can change the color of the chart so that it can adjust to your eyes. You want the chart to be visually appealing to you. Okay. Right? And so for in this case, I want my chart to be black. My chart used to be gray. I'll show you my old layout. I used to trade like this. And I found that it wasn't really appealing to my eye, and it really messes with your psychology because it makes you overthink sometimes, right? And so I just find that having my chart in this color, I see the market better this way. Okay. And so yeah, so basically this chart right now is GBP NZD. This pair is very risky to trade, but once you know where you are in the overall market, it should be very easy, right? And so remember what Ricky said, once the trend line breaks, even when Q says, when the trend line breaks, what are you looking for? Either a sell or buy. And usually when the trend line breaks, that means we're either looking for a very impulsive sell or a very impulsive buy. So in this case, we have GBP NZD, and I drew the most significant touches here. So that's 1 touch, 2 touch, and then you can see this candle here, how it broke. And I'm going to tell you, this pair has been in a consolidation phase since January of 2017, since October, so since November the 12th of 2018. So it broke. So what did that tell you? That this is going to be a big sell because look how long it was consolidating for. Do you know what I mean? And so I'm going to add another point of confluence here. So Ricky, he uses zones. I'm going to draw a zone here. Oops. I'm going to scale down to the lower time frames. I just want to show you, you just want to know where you are on the overall market so that you know. So I know if I see that I'm going to be in a sell, I'm going to be in a sell basically for the whole entire month because it broke this trend line. Do you know where I'm coming from? And so this is my zone here. I'm going to scale down to the daily chart. And you can see that it broke the trend line. Look at that big impulsive break. So we had our break, we had our retest, and now we're looking for a sell.
Hold on right there. Hold on right there, Khristine. Yeah, go back to that.
Sure.
So whenever I was telling you how if it's something breaks, no matter if it's like a support or resistance zone or a trend lines are nothing but support and resistance lines that are
right.
Significant. So if you look at where it broke the trend line and you look for the retest, if we were in a sell and the market broke in a seller's momentum phase and we look for a retest or a retracement, what color on this particular, on her scheme, what colors are going to be those candles? Green, right? Because that's the buyer's candle, right? So we simply look for the buyer's candles to be overtaken. And then we look, and that's our perfect area to be entering into the trade. So we look for that pullback and then we look for the entry and then boom, we just sell.
We just sell, basically. And so that's how simple I keep it. I'm gonna go into further details, but I always start with the weekly chart or the monthly chart just to give me an overall view of where I am in the market. And so in this case, I was in a consolidation phase or a corrective phase, basically. And then I'll show you how I take profit. The way I take profit is very different because I want to be more of like a long-term trader. So I'm going to scale back down to the daily chart. Okay. And then we can clearly see here, support becomes resistance. So I drew this zone right here because we had multiple touches. Right? And we had that big impulsive candle break, retest, sell. So now I'm going to go on, let's see here, the H4 chart. You can now see that sellers are now in the market at this time. Right? Let me just draw this right here. So I'm really big on trend lines. He's big on zones, I'm big on trend lines. Just give me one moment here. Let me just draw this completely. And you want to be sure that you're super, super precise and accurate in the way you draw your trend lines as well. So I typically am a breakout trader, I should say. So I usually take trades at the break. So I wait for the break, retest, and then sell. So I usually actually go on the 1 hour chart to take my trades.
Okay.
But I just want you to see, are you getting what I'm drawing here on the weekly chart?
Yes.
This is all that you need.
Your method is very simplicity. Very simple.
So what you need to know is that am I in a seller's market or am I in a buyer's market? Am I in a seller's market or am I in a buyer's market? Once you know that you're in a seller's market, that's it. You're selling. Don't even second guess it. People look too far to the left of your screen because you're going to start overthinking. You know what I mean? So in this case, on the weekly chart, we broke that trend line for like a whole year. What does that tell you? It's going to be a big push. We're expecting a big push down, right? And so right now you can see on the weekly chart, it's actually retesting that trend line break. It broke, retest, and now we're looking for a sell. So where I would take profit is at the most significant points of the trend line touch. So this would be my take profit 1, which is, it's going to blow your mind how many pips it's going to be. 1,300 pips. You're not going to hold it in one go. You're not going to hold it in one go. You're going to probably want to scale in and out, right? You want to scale in and out. But since you know where you are in the overall trend, you're in a downtrend. Simple as that. So what you're going to be looking for is just sells. And you have the knowledge already. You're getting that knowledge of how to enter into market. So what are you going to be looking for? You're going to be looking for lower lows and lower highs. Or sorry, lower lows and lower highs and lower lows. So you're going to be getting in on lower high points in the market. So right now we're at a very significant point in the market where it retested that zone and it retested that trend line. So that's 2 confirmations right there of confluence, and it's on a higher time frame. Remember, we're on the weekly chart. We're not on the daily chart. We're on the weekly chart. So that just gives you more confirmation that this is going to be a big sell. this is going to be a big move for you, right? And so my take profit would be, take profit one would be here. Take profit would be at the start of my correction.
Take profit two.
Take profit two. So take profit one will be here at the most significant touch. So not here, but the most significant touch of the trend line. And I've seen it play out many, many, many times. You can take my word on this. It's going to get there, right? So now since I know where I am in the overall market, I'm now going to scale down to the daily chart. And you can see on the daily chart how we have this wick exhaustion here. Do you see that wick exhaustion? That's just letting you know that, okay, it tested the trend line and it rejected. This is on a daily chart, right? So it retested in that zone and on that in that zone and on that trend line. And so that's giving me a sign that, okay, since it rejected that trend line and that zone, I'm going to be looking for a sell. This is just another confirmation. Remember, it was in this consolidation phase for about a whole year, right? So now I actually have the full version of TradingView. So I have TradingView Pro. So I actually have every single time frame. And again, I'm on the 12-hour chart now. You can like see, look at that pin bar. That's just letting me know that sellers are slowly coming in, that buyers are getting exhausted because we're at a very significant point in the market. So I'm saying be very anticipated for the moves that are going to come in 2019 because that's going to make you a lot of money.
Oh my goodness.
Right? And so here we are on the H4 chart. Is this H4? Yeah, it's H4 chart. Looky here. It's not a complete engulfing pattern yet, but you can see, like, look how big that is compared to the previous candle. It's just letting you know that sellers are slowly creeping in. Sellers are slowly creeping in. So my method is trend lines. So I don't really use zones like that. So what I'm going to do is I'm going to take out my trend line tool, and I'm going to, let me just do, I usually like to do it the most significant touch, if that makes sense. The most, right? And now all of what I'm going to be waiting for is literally a break, retest, and sell. I'm anticipating the sell.
Stop right there. So do you see how simple that she made that just from scaling down to smaller time frames? She started out from a higher time frame, sir, and she drew her trend lines on a higher time frame to kind of see where she was in the market. Then she tried to trap the price at a lower time frame. Does that make sense? So now she started on higher time frames with trend lines. Then she went to lower time frames to then critique more trend lines inside of the higher time frame trend line structure that she's made. Does that make sense?
Yes, I'm looking at the original. That first trend line you made was from the weekly time frame.
From the weekly, right here, right? Yeah, right. I drew it on the weekly chart because I want to get an overall structure of where I am in the market. I want to get an overall overview of where I am in the market. Don't worry about the H4 chart because that's clutterness. You want to know where you're going long term. You want to make the big bucks, right? You want because I know you're a busy man and you want to make that money, right? And so what I like to do is I always want to make sure that I am on the bigger time frame so I know I can predict these moves ahead of time. I already know I am. I'm predicting these moves months in advance. I already knew this was going to sell because I drew my trend line. I already drew my trend line from beforehand.
So that zone the supply demand zone you drew there, you drew that from what? Price itself?
Price itself. So you can see right here how many times. I'm going to take out a trend line as well. And again, you want to have the average wick touch, right?
Okay.
Price tested it many times. That's letting me know that this is a very strong point of support. And what happens when price breaks support and retests it? It retests, it has to retest. It becomes what? Resistance.
Okay.
Right? It becomes resistance. And so that's where we actually are right now in the market. We're at a very significant point of resistance and confluence. See, I even drew that trend line as well. So that's actually 3 points of confluence right there for you.
Now, would it matter, Khristine, whether you draw a zone or a trend line? Because if you look further to the left, it would have been a resistance there. So does
yeah,
it matter?
Don't worry about too much about what's going on to the left of your screen. Don't focus too much. Worry about where you are in price right now.
Okay.
Worry about where you are in price right now. But
Okay.
just remember just to draw just like the outer structure of where you are in the market, and then from where you know you are in the market, where am I on the daily chart? Am I on a sell or am I buy? Right now, it broke. Remember, very significant time point. This is January of 2017, and it broke November the 26th of 2018. So what is it going to tell you? That's going to be a very big push, because look how long it's been in consolidation for. And I can even show you on price right here. It plays out all the time. These patterns play out all the time. And so I'm going to draw my trend line again. Don't worry about this. I think this is like news or something. GBP, they always got like crazy news. I'm going to take out my Heiken and Ashi candle chart again to show you just how clear. So basically we have consolidation, break. Consolidation, break. I'm anticipating another break because of past price movement. See, that's why you need to understand the behavior of the market.
Does that make sense, sir?
Yes.
So whenever it first broke, tell him how your take profit would have been at the lower part of that leg over there, and how it hit take profit based off that first break.
Yeah. So basically, okay, hold on. So I just want you. Do you understand what I drew before I had here? So
yes,
knowing your patterns as well. So also getting into patterns as well, because I feel people have been really pushing that to the side, like, you know, who really uses wedges anymore, or expanding triangles and channels. That's what I use, and that's what's gonna make you make money long term. You know what I mean? So it always plays out. It always plays out. So in this case, yeah.
Is this your favorite pair also?
The thing with me is I don't have a favorite pair. I like to trade pairs that that I can see clearly. Like if I have to second guess where I am in the market, I'm not trading it. I don't want to trade UJ because everyone's trading UJ. You know? Trade a pair that you're comfortable with, trade a pair that you can see clearly where you're on the market. You can clearly see how clean this is. You will always have an opportunity to get in the market. There's so many opportunities to get into the market. So right here, you can clearly see that we're in an ascending triangle. An ascending wedge or channel, basically. And that pattern indicates that we're either going to be looking for a significant sell. So I'll probably send you a PDF file of just like the patterns that I use. That's going to really help you just to reference off of. Right? And so we see here we have confluence here. So look at how much times it tested that trend line or that zone. So I drew that because I saw multiple touches there. So then let me just extend that. And then it broke past it. This is, remember, we're on the weekly chart. It broke. And now we're at a weekly retest. So now I'm going to scale down to my daily chart. And then now we see that wick, it tested it. It rejected it, actually. Right? And so now I'm going to actually scale down to my H4 chart. So what I like to use trend lines within trend lines. Trend lines within trend lines. So basically what I was doing on the weekly chart, I'm now doing it on H4 chart. It's as simple as that. Now I'm going to be looking for, once I know that this breaks, I'm going to be waiting for a retest. But I'm actually going to be looking for that on the H1 chart. And so I'm actually going to bring out my Heiken Ashi candle chart again, because to me this looks really cluttered. Not cluttered, but like I need to see things for what it is. I'm actually going to erase this because I actually don't need this. You want to know where you are in price. The most recent price action. So again, I'm going to take up my trend line, and we're still in the Heiken Ashi candle chart just to make things clear for you. Right? Again, most significant touches. So don't worry about it not touching this price, not touching this trend line. The most significant touches is what you're more concerned about, what you should be more concerned about.
Okay.
Right? Don't worry about it not touching that. Again, I'm going to make another little small channel. Actually, let's draw it from here. Let's draw it from here. So now that I know that I'm anticipating a sell, that's what I'm going to be looking for in the market. And so for me, what I'm going to be looking for now is I'm going to be looking for a sell beneath this higher low here. Because right now, remember, this whole thing right here, this whole area right here is the retrace on the weekly chart. It's actually that whole retrace on the weekly chart. So I'm going to just simply highlight it here for you. And I'm going to pull back the weekly chart. I'm going to change the color here. Oh. Okay, I'm going to go back on the weekly chart. And you can clearly see that whole, all that noise was just a retrace of that weekly chart that broke. If that makes sense. Does that make sense?
Mm-hmm.
Right? Yeah, so I'm gonna erase this now. I'm gonna go back on the H1 chart. And I'm actually gonna pull up the Heikin-Nash channel chart just to clear up the noise. You can clearly see how clean it looks now when I pull up the Heikin-Nash channel chart. And what I'm gonna be looking for now is a significant break, like Ricky taught you, a significant break. I'm gonna change the color here so you can see. So what I'm gonna be looking for now is a break. Break, retest, and then sell. So I actually feel comfortable waiting for my break of structure on the H1 chart rather than waiting on the 30-minute chart, because sometimes it confuses me, you know, right? I just see things more clearly on the H1 chart, just my entry.
Okay.
So you can clearly tell here that another confluence point as well, that this was like the most recent, the most significant touch of the trend line. And now what we're looking for now is a break. In order for me to confirm that this is going to be a sell, I'd rather be patient than to be impulsive and get in. What if I got in here?
I like that.
What if I got in here? It would have bounced up.
That's good.
It would have bounced up. So we have to wait. Be patient. Patient. We'll wait for it. It's going to happen. Wait for it. If it doesn't happen, then just wait for another. Just wait for another setup. Right?
Okay.
So I'm going to be waiting for that break, retest, and then I'm going to be selling. So this is where let's say the 30-minute chart comes in. Right? So I'm gonna draw some fake candles here for you. And we know that we're in a clear, it's a break of structure when we get two candles break the trend line or support line or resistance line.
Okay.
So I'm gonna be waiting for, let me just draw this red. How do I fill this? Okay, so what I'm going to be looking for to let me know that I'm ready for a sell is one candle here, and then another candle. That's going to let me know that, okay, sellers are in the market, because that's two candles there. It's letting me know that, okay, we're ready to sell. It's going to be a 1, 2. Q even said that you need at least 2 candles to know that a trend has been broken, or you're ready for a sell, you're ready for a buy. Let me just erase this here. Number, nor we are on the overall trend. So I'm waiting for this to break. So we need one candle, and the second candle is going to determine whether it's broken or not. So to let you know if it's not broken, we would have had, hold on. This candle, this would have been a green candle here. That's just gonna let you know that it's been tested. And then it would have been trickling back its way up. So we'll know that it's broken based on the second candle that forms.
You remember? You remember that in the Wall Street Academy where he shows you?
I'll never forget that.
I think that's in I want to say phase 2 when he's talking about breaking tested candles. And
apply these things because it's gonna pay you, right? So I'm gonna eliminate that there. So that's what I'm actually waiting for right now. Is I'm just waiting for that extra confirmation. So I'm gonna be actually just waiting for that that second candle. And then what I'm gonna be waiting for, I'm gonna wait for it to trickle its way back up. I'm gonna be waiting for, let me just draw it here. Let me just give me a moment.
You're fine, take your time.
Right, so that's a break, retest, and what are we going to be looking for? A bearish engulfing pattern or bearish variation.
Okay.
Good job, sir. I heard you say it. Good job.
Good stuff. You're learning. Good stuff, right? And I'm doing this all on the 30-minute chart. So you can do this on the 30-minute chart. You can do this on an M15 chart, but I would just obviously go on the time frame that you're most comfortable with, right? So break, retest, and now we're going to be looking for bearish engulfing candle. That's going to let me know I'm going to take the sell and I'm going to hold it. Remember, this is from a retrace from the weekly chart. So now we're getting, and we're anticipating that sell now. So all we're looking for literally right now is just a confirmation sell, because we already had previous confirmation of where we are in the overall trend, how it retested the weekly zone and trend line that I drew. So this right here would have been an engulfing pattern here. Once it closed, wait for it to close, because the market can literally retrace within the last 2 seconds.
Right.
It'd be a complete like doji or wick. And then you'd be like, wow, lack of patience, right? So all I'm going to be waiting for is just a close. Once I see that it closes, it engulfs that previous candle, that green candle, then I know that sellers have taken over. You see that the seller's momentum. So once I see it, I'm taking a sell. That's it. That's all I do. That's all I do. That's all I do. So again, I'm going to go back on the weekly chart to show you the week, and then this will be my first take profit zone. Remember, we're in for a big sell, so that's, imagine where that would be on a standard lot. That's $13,000. If you had enough guts to hold it, but at the same time you're scaling in and out. You have the skill set to know how to take multiple entries. Because what are you waiting for? It's either going to be a bearish engulfing pattern or a bearish variation. That's it. That's all you're waiting for, right? So, you have any questions? I'm going to show you other pairs, but
no, I don't have a question. I have a comment. Listening to yourself and Ricky, I think I came to a conclusion of what one of my problems is I'm too analytical.
Yeah.
And that's what hurts me. Because of something you both said previously was, I don't have to go that far back to see where price is. And I am too analytical. I dissect stuff that's unnecessary. Looking at what you just did, that shows me where one of my flaws are, and it's too analytical.
Don't overthink it.
Yes, I do.
It's going to take time to get rid of that habit, because I used to be like that too. I used to be like, oh gosh, the trend line is not touching that previous candle. Why isn't it touching it? I can't get into this sell because it's not aligning with previous price.
Right.
You gotta realize that the market is not perfect. We have to adapt as we go. We have to adapt as we go, right?
So,
and so
yeah, trade what you see and not what you think, right?
Perfect.
You get it.
I'm trading what I think.
Yeah.
Just literally adapt to the market. Like, don't be so stubborn and be like, this is what I think, and that's how it's gonna go. The market doesn't care about us.
Right.
The market does not care about us, and then ultimately it's actually the banks and news that actually move the markets. Like, we don't do that. Like,
right.
You just have to go with the flow.
Now, do both of you guys trade each other's style, or you stick to your pattern trading, and Ricky, your style?
I'll answer that first, and I'll say that with her and I just really coming into awareness of who we are and what we're going to be to each other going forward. She's really taught me a lot. I told her this many times, but in the little time that we've been on webinars, which we really only been on the webinars a couple of different times, but she's taught me enough in just a couple of webinars we've done to enhance my trading style so much more, which is why I found it worthy of her to be on this webinar with yourself, because she brought some value to me.
Yes.
And made it even more simpler than I even trade. And I mean, just think about how much time I took just explaining what I was explaining to you. And she just whatever. He did it down in like less than 30 minutes. I took 2 hours dang near 2 hours just explaining how I am, because when you say yourself, you're very analytical. I am that way as well, but I'm analytical when I explain things to people, because I want people to really literally see how I see the market. Like, why am I even seeing this, like the bullish and bearish engulfing pattern the way that I do, so on and so forth. And I typically try to go very, very, very deep in discussion of how and why, so that you can kind of get the analogy of how and why I'm seeing things. But it's all literally what Q has taught me, you know, and that's why he has so many videos and so many webinars. And if you go to the webinar section and you start to see all these people asking some questions, he'll eventually, once you get deeper into the webinar, he'll be like, have you even watched any of the webinars prior to? Because it sounds like I'm just answering the same questions. And these are obviously new people that are coming in, but they haven't really seen the course, because all the questions that they would ask on some of these later webinars have been answered in the earlier webinars. And so with my trading style, I trade exactly like you, but with her channels and trend lines and such like that, I love how simple it is. And to me, it helps me stay. I think what value this is going to bring to my trading style in 2019 is it's going to allow me to hold my trades longer. And I felt like I've already been pretty decent at swing trading. You know, to even be able to catch, for me, my average, like guaranteed amount of pips to catch for me would be about 50 pips. I can do that. Anywhere between 20 and 50 pips are going to be my average that I can catch. I can do that just like clockwork. But Khristine, on the other hand, she's catching, you know, we'll say 100 minimum, but she's going up to 300, you know, plus. You know, so
it's in your face, like right here. Retest. We're selling. The risk reward is so great when you have patience, right? And so we're at a point where we're consolidation. Remember, for a whole year. So remember where you are. Look at the past price. Look where the dates were. This was 2017. It's been in this channel for a whole year, for more than a year. So obviously, if it breaks that channel, that's like, wow, that's going to be a push. So it did actually give us that push at that big momentum weekly candle. It literally just shot down, and now we're at a point of retest. So it plays out on all time frames. It's the same thing. It's the same thing. Don't overthink it. Okay. That's it. Just don't overthink it.
Okay.
Right? And so
Rick, go ahead.
No, you were gonna ask Ricky something.
I was gonna say, Ricky, when you broke down yours, I thought about Jesus when he spoke many parables. Jesus always was in front of regular people that couldn't understand spiritually. Okay, so Jesus, he spoke many parables, and when I asked you a question, you caught that I didn't catch the revelation yet.
That's
so
what I said.
A parable is just a spiritual saying with an earthly meaning. So you knew how to break that down to a level, like Paul said, when I'm in Rome, I'm as a Rome. So I appreciate that, man. I appreciate you breaking that down, man, and catching in the spirit that I didn't quite understand it yet.
Well,
I'm sorry.
Well, go ahead. You go ahead.
And you caught that, and you began to break down the daily with one long line, the 4 hour with a couple lines, and the 1 hour with multiple lines. You caught you caught the misunderstanding that I didn't catch it yet. So thank you for that, man. And now Khristine, I mean, that's simplicity there. I mean, but I noticed one thing both of you guys has not used, which I've been trying to use a lot, and that's Fibonacci.
Oh, I just haven't gotten into it.
Go ahead.
Once you go through my course, you'll see that I use it. I actually do use that fairly a lot. But honestly, the Fibonacci is kind of redundant in the sense of, if you look at how Khristine has a zone literally across her weekly time frame, the Fibonacci is literally just going to line up with most likely some level of structure. Fibonacci is just structure to me. I do use it just to see, okay, hey, it's a 38.2, so I could be looking at maybe a take profit of negative 27%, which is what Q uses. But that's why I say I catch anywhere between 20 and 50, maybe 100.
Yeah.
And she's pulling out 100, 200.
Yeah, and for me, like, I stopped using the Fibonacci because I felt like it was limiting myself to my full potential. Like, I can get more than 50 pips. I don't have to rely on the negative 27% or negative 61.8% because that's really conservative. If I know where I am in the overall market, why am I limiting myself to taking profit at negative 27%? When I know where I am in the overall market, why am I going to use a Fibonacci? For example, I'm going to take it out right now, point A to point B. Oh, it actually lines up perfectly. That's crazy. Guys, look at this. It lines up perfectly with what I just said.
Wow, look at that.
So it's actually right now at 38.2. So that's 4 confirmations for you right there. It's letting you know that, you know, it's a sell. And you know when it's at 38.2, that's going to be an impulsive push. And where we are in the market, we're at a significant break on the weekly chart. A significant break. Right? And so what we're looking for now, that's just giving you more confidence to know, like, yeah, I'm going to sell. I'm selling this. I'm selling this. So you can use to begin with, you can use a Fibonacci to help you to take conservative profits, take profit points.
Okay.
Now I'm at a stage where I'm ready to think big. I'm ready to catch those 400 pips, 500 pips easily.
Me too. I'm ready too.
Okay. Like, what? And so you're going to get there. You're so going to get there. And I'm going to actually show you 2 other more pairs, and it's going to blow your mind at how easy it is to catch these moves. So this is UCAD. Right? I don't want to delete this because I just want to show you. So UCAD, this is past price, or this is like past price movement for you. So we had a big push down. We're on the weekly chart now. We got a big, I'm going to put up the Heikin Ashi candle chart just to clear up the noise for you. So you can clearly see the difference. You can see the difference with the Heikin Ashi candle chart versus the regular candlestick chart. It clears it up for you. Right? And so we can see here, we had an impulse here, other known as consolidation, push down. Impulse, what are we looking for now? Push down. That's it. That's it. And that's why it's important for you to know the patterns. Know patterns. Understand channels, how they work. And understanding where you are in the market. And we have here, again, the zone. So what am I looking for again? I'm looking for confluence. So I'm actually looking for price to enter into this zone right here and trend line. Remember, this is on the weekly chart. So once I see that it gets to this point, I'm going to be looking for selling opportunities. I'm not at this point. I'm not looking for buys because I know where I am in the overall market. Compared to previous price, look where we are. It was a impulse. No, we had a correction, impulse down. Correction. What are we looking for now? A sell. I'm looking for a sell right at that top portion. So my take profit 1 would be at the bottom portion of this trend line. I can tell it's reliable because look where it plays out every single time. Plays out every single time. And then again, if it breaks this trend line, where's my take profit 1 going to be? At the most significant touch. The most significant trend line touch. That'll be take profit 2. Take profit 3 would be here. Take profit 4 would be here. Take profit 5 would be here. It plays out every single time. Usually when it breaks, trust me. Usually when it breaks out, it always goes back to where the correction started.
Now you were into the trade on the 30-minute?
Yeah, so I would mark up. I'm going to show you how I would enter. I'm going to scroll down now. So this is the weekly chart.
That's 5 TPs.
5 TP. Multiple entries.
And let me just show you how much pips you're going to get from here. So January. This is coming in January, so you can get in on this. That's
current then. Okay.
This is UCAD. Yeah. So I'm going to be looking for it to retest that trend line to get to that point and get back into the zone. So this from here is literally going to be 550 pips. You can hold it because UCAD is so reliable. UCAD, it does a lot of wicks, but don't worry about a wicks. Worry about where you are in structure. That's it. And we know that we're getting to a point where we're going to want to sell based on previous price right here. It plays out all the time. I can tell you that these patterns play out all the single time, and people overthink it too much because that's too good to be true. There's no way that the market can move 500 pips. Your mind is, you got to remove that limitation off of your mind.
Mm.
And then from here to here, how much pips is that? It's 1,000 pips, 1,100 pips. It plays out. It played out the last time. Where did it go? 1,100 pips again. Plays out.
That's
yeah.
1,600 pips already. Whoa.
So yeah, so don't think like I need to use a negative 27 point. You can do so much more than that. Like, if people can make 1,000 pips, we can do 1,000 pips. Like,
exactly. And also I want to kind of add on to that, you know, as we see that, yes, 1,100 pips is possible, just know that it's going to take some time to get there. And so when you said scale in, you take profit anytime you want to, but scale in as you take those profit. You could literally be, let's say you get your first entry right up there where that zone is, and you take your first take profit whenever you hit the bottom of the trend line. But let's say you have 2 entries in over time. You get one at the top of the zone, maybe it creates a lower high than a lower low than another lower high. Because, you know, in the downtrend, the most profitable area to get in is going to be at the lower high in the downtrend.
Right.
Because we don't want to get in at a lower low in the downtrend, because we're going to have pretty much a retracement come against us. We want to wait for the lower high downtrend and then get in our entry once we have the seller's confirmation, which is a bearish engulfing pattern. So as you see those lower highs be created and the bearish engulfing patterns come in, boom, that's another entry.
That's all you need. So at this point, like, you can get into a buy if you want to, but like, knowing where we are on the overall market, I'm going to be looking for a sell. I'm perfectly fine with waiting. Right?
So you're waiting to price actually.
Oh, I'm waiting. Yeah, 100%. I'm waiting for it to get back right over here. It's the same thing that happened here. That's why I drew this zone here and I dragged it. So that's just 2 confirmations right there that I need.
Perfect zone, by the way.
And then from there, I'm going to scale down now to the daily chart. And you can see here, it was actually, again, I draw channels within channels. Channels within channels. So I actually took advantage of buying and selling in this channel here, but I knew where I was in the overall trend. So at this point, I was just looking for buys, right? And so I'm going to scale down on the H4 chart, and you could have taken advantage. You could have taken advantage knowing where you are. Remember this right here. I'm going to change the color of this trend line here for you. This green line is actually the weekly trend line, right? Now on the weekly trend line, it's buy. You're looking for buys, right? So now on the H4 chart, I would have been taking advantage of those buys by drawing, again, channel within channels. So right here would have given me indication. Oh, let me just clear that up there, right? And I would have just literally because I have a lot of confidence in the market where I am, I would have literally just gotten in on an engulfing pattern or bullish variation or a bullish engulfing pattern on the 1-hour chart, just by simply knowing where I am in the overall market. Right? And so this right here is the 1-hour chart. Remember, this is that green line is that green trend line is from the weekly. So, right? And so what I'm going to do now is, again, I would have waited for price to break this point here. So break, retest, what are we looking for now? Bullish engulfing or bullish variation. So this can be done on like the 30-minute chart, or for me, I just want to do on the H1 chart because I know where I am in the market. I have enough confidence to just place a trade and just hold it. It's not going to go against me because of what previous price did and confluence and confirmation, right? So that's UCAD. But what I'm going to be waiting for is my anticipation now is to sell. That's all I'm waiting for. I'm not going to be getting the buy because look where I am. We're literally at that point. You know, when the market opens, it can literally have a huge gap, and then there we are at the trend line, right? Because I know a lot of people are actually anticipating this move to sell. No one's buying UCAD right now. That's why it's so let me just show you here.
Well, what is more important there, Khristine? The zone or the trend line?
Honestly, I like to do trend lines. I actually just really recently started to incorporate zones, but it's just, think of it as just another form of just confirmation for you. The more confirmations, the better.
Okay.
For me, I love to use trend lines because that's what I trade. That's my style of trading. For Ricky, his style, his confirmation mostly is zones.
Mm-hmm.
I like to use trend lines. So for me to add zone is just another form of confirmation for me.
Okay.
Right?
Mm-hmm.
Again, don't overthink it. Right now I'm at a point where I'm actually waiting for this to break. So since I know where we are, it doesn't have to get up here. Actually, it doesn't even have to reach that point, that zone or that trend line. It can drop at any single time. It can drop at any single time. So at that point, I'm going to pull out my Heikin Ashi candle chart. I'm going to go on the H1 chart. Again, the same thing that I showed you on GBP NZD. What are we going to be looking for? We're going to be looking for a break of the most recent trendline touch, break, retest, and sell. Go on your M30 chart and look for a bearish engulfing pattern or bearish variation, and that's it. You're selling. So it can drop at any time. It doesn't necessarily have to go all the way back. See it right here. It didn't touch that trend line over here. It actually dropped. So that can possibly be the same thing that's happening for UCAD. Everyone's anticipating, especially since we're now going into the New Year's. Everyone had their vacation. Now everyone's getting back into the grind mode. So, right? And so everyone's anticipating that sell. We're going to go back on the H1 chart. And then what I'm going to be looking for now is, again, I drew this zone again here. And you can see the wick exhaustion. Rejected, third rejection. And the thing with that, the third touch, from experience, I'm telling you this, the third touch is always the strongest. It's always the strongest. It's going to be a very impulsive move. I'm going to show you that in a moment with odd. So you can see with the zone, it went in the zone, it rejected. It went in the zone, it rejected. It went in the zone, what? It rejected. So now I'm actually going to be looking for a break, retest, and sell.
Okay.
Right? And then we go on the M30 chart. I'm going to take this off now just to get a more clear view for you. So it went in the zone, it rejected. It went in the zone, rejected. It went in the zone, rejected. Went in the zone again, it rejected. So all now I'm just waiting for is just a potential break of this previous higher low point for it to sell. And that's it. That's it. And again, I'm using my trend lines to help me with that.
Oh, okay.
So it's going to take time to incorporate all this, but that's just how I trade. I don't use too much. Yeah, so I'm going to go on the weekly chart again. You can see how it plays out. Consolidation, break. Consolidation, break. We're going to look for the break. It plays out every single time. Consolidation, break. You have to train your eyes to see the patterns in the market.
Okay.
All right. So do you understand basically what I explained? You have any questions?
No questions.
You have no questions. You sure?
I have no questions. I have an assignment, not a question. And my assignment is to watch and rewatch. That's my assignment.
Yeah.
By the end of probably January, like I was telling you, by the end of January, maybe even end of February at the absolute max. I'll have the website done. I'll be featuring my lovely wife here on there as well, and
hallelujah.
She'll be able to have her little portion. I believe she'll actually have a lot of students that flock to her style of trading, which is why I actually include her in the website, because a lot of times the way that I trade, with different people who are able to handle different trading styles, you don't have to stick to Q's trading style. There's other people that make tons of money doing different, and she proved to me that she was able to catch more pips than I ever have, literally in one trade. with the way that she actually trades. And it just blew my mind. And I'm like, I'm sitting here using Q stuff, and his stuff is very effective for catching me, 20, 50, 80, 100 pips. I think the most I've caught on any trade for one trade would probably be about 100 pips, like 100, maybe around that area. And that's just on one particular trade. Now, I can scale in and catch, 150, 200 plus, but it's one trade, taking profit at the negative 27%, depending on my 4-hour time frame analysis, I'm getting about 100 on the pairs that I actually trade, which is great for me. But knowing that she's able to break down the market a lot more simpler than a lot of people can understand and grasp, and keep it simple. Now she combines something she's learned from Q, which is breaking retest, no retest, no entry, looking at structure, because obviously getting a more safe entry in the way that she in her trading style can really work towards your benefit. But the whole point of it is you have to have patience trading her style. You have to wait. She's saying time and time again, you have to wait. For me, when she said that she wouldn't be looking at getting buys for UCAD, for me, I'm like, I'm getting buys into that zone. That's me, because I know that if I know the zone is going to be touched regardless, I'm getting into buys. But for her, I know it's about to drop heavily, so I'm gonna wait for the sell. That's the difference between her and I, but we're very similar with what we trade, but our styles are different. Does that make sense?
That makes, again, as I mentioned earlier, that you guys are like a fly on my wall inside my house, because again, here you are confirming something else that reflects Khristina's style is, as a preacher, I've been preaching for 10, 15 years, but I still need to inquire more patient. And again, that's another one of my shortcomings. I look at the market, that's gonna go down. I'm getting in, knowing I need to incorporate patient. And then when it comes down and then go the opposite way, another one bite the dust. So, this is very, very informative. These past several hours, man, I really appreciate you guys. I really do.
Yeah. So what I'm going to show you now is your odd. So your odd is actually the pair that Ricky was literally just showing you. So you can see the difference already. I'm on the monthly chart now because I see 2 significant points where I can draw my trend line. So you're always going to significant points of where the market can retrace. And so I'm going to, again, bring up my Heikin candle chart. And again, it clears up the noise. So you don't have to like go all the way here and be like, like, do I got to draw this here? No, look at where you are in the market now.
Okay.
Like, yeah. And so from there, right now in odd, I'm actually in a channel. So I'm going to actually go on the weekly chart now. And again, trend lines within trend lines, channels within channels. So we're looking at, again, the most recent price, the most significant touch. So here we go. So we got 1, 2, and then 3. And I'm going to show you something so funny. Remember how I told you that the third touch is always very significant and strong? So on the first touch, we had here, boom. Okay, I'm like, cool. Let me take my trend line now. Second touch, okay, awesome. This trend line, I can trust this trend line because it retested the same spot. Third trend line, look how strong that was. And what is that? And what pattern is this? What pattern is this? What pattern is this? There we go. And what does that tell you? That what buyers in the market. And this is on the weekly chart. You don't have to wait for this to happen on the weekly chart, but past prices is telling you that it's going to happen again. Like I'm actually going to be looking for a buy. Since it touched this trend line beforehand, then I'm expecting it to touch it again so I can buy. And it plays out every single time.
Now that candle engulf on the weekly.
On the weekly, so that's strong. That's so you know that wow, like we're long. We're super long on this.
Okay. So then what time frame would you have entered on that trade?
I'm gonna get there. Hold on.
Oh, okay.
Yeah, so I just wanted to show you again. This is why it's so important to know where you are in the overall market. It's so important to know where you are in the overall weekly chart, monthly chart, daily chart. Those are going to be your best from that chart. It's going to determine if you're going to be buying for the month or selling for the month.
Right.
Simple as that. Right. So now I'm going to go on the daily chart here. And you can see how it tested that line that I drew on the weekly chart. Right here, you can see it, right?
Right.
And in that case, now I'm going to enter. What I like to also draw as well is I like to draw trend lines again. So I like to. I'm going to show you on the H4 chart. So why I do this. Sorry. So again, this trend line, you see how it was rejecting that trend line? It rejected one time. I'm going to just draw it here for you. So it rejected here as well. It rejected. So that's telling me that this trend line is strong. So if I know this trend line breaks, I know that we're long. Again, knowing where we are in the overall market, this right here was a weekly chart. This is a weekly trend line. You can see, look at the momentum in candles right here. So look at the momentum in candles.
Wow.
It's this is bouncing off the weekly chart. I'm going to go back to the weekly chart and show you again why there's so much momentum in candles, because it bounced off that weekly trend line. And again, I told you the third touch is what? The most powerful.
Very strong.
It's very strong. So take note of that. That the third touch doesn't have to be on the weekly chart. It can be on the daily chart. It can be on the 1 hour chart. That third touch is always the strongest. Because it's letting me know that, dang, like, we can't win, you know? The sellers can't win. Like, we suck. Okay, you know what? Buyers are in the market now. And so I'm going to scroll back down to the H4 chart here now. And it rejected here again. You see? Rejected here again. The most significant point. The most significant point of the trend line is what you're most concerned about. Don't worry about what's going on here, about the negative space over here. Don't worry about it. What we're most focused on is the most significant touch. And I'm going to show you again. Once I saw that break, this is where I got in, actually. This is where I got in. I didn't even wait for a retest. I didn't even wait for a retest because I saw that candle. I'm going to go on the H1 chart now and basically show you. Right over here. This to me was a confidence trade. Like, this was like, it broke, I know it's going to retest. So basically I got in right over here. This is what you call a breakout trade. So you had your impulse. Remember, a big push. Remember, I told you that a trend line is not broken unless we have 2 candles. Unless we have 2 candles. So we had 1 candle here, and then we had our second bullish candle here. That's letting me know that, okay, buyers in control right now. And remember where it's coming from. It's coming from a point of support on the weekly chart. So now that I see that it broke, it literally broke. So what I'm going to be waiting for, I'm going to be waiting for a retest. So this was my retest to let me know that I'm going to go long, right? And look where it went.
Wow. You caught all that?
I caught like 200 some pips. But I knew I was going to catch this because it broke the trend line. It's simple as that. You know where you are in the market. It literally, like, this is a weekly trend line. Okay, that's my first confirmation that this is going to be a buy because of past action, past price action. Look, first touch, second touch, third touch. It's literally in your face. First touch, second touch, third touch. Look at the momentum in candles. Right? And so that gave me a sign, an indication that we're long, like we're long, completely long. And so I got in. I didn't even go on the M30 chart. I just actually just put a buy stop, I believe, like right above here. And I just trusted myself because it broke. 2 candles gives the indication that we're either in for a buy or sell. And that was it. And I got in around here. And I believe I got out somewhere over here. And I'm going to show you. You see how there's so much bearish momentum coming in the market now? You see that? That's because that's actually a retrace now on the daily chart. So the market needs to breathe. So you have your higher highs, your higher lows, your higher highs, your higher lows. This was forming its first higher low point, basically. It broke. And what are we looking for? We're looking for that retrace. So I got in from like around here, broke, and I got out at that higher low point, that first point right here, or higher high point. Retrace, Higher high, higher low. Higher high, higher low. That's it. That's it. Just trust yourself. So don't overthink it. Don't think you need all this on your chart. You don't need that on your chart. You don't need it.
Okay.
So trend lines play a very significant part in my trading, my trading style. And again, I'm going to show you trend line. Look how it rejected, it rejected, it rejected, it rejected again, and it broke. What is it going to tell you? That we're long in accordance to where we are on the weekly chart. Third touch, that's like 4 confirmations, and look where it's heading. It's heading back to that resistance point that I drew. And so am I going to be buying? No, I'm going to be waiting for that sell. So go back down. So I hope that, yeah. You have any questions?
No, I don't.
You don't, eh? Wow. So at this point, remember I told you it can drop at any time.
Right.
It can drop at any single time because we're near that point of resistance, right? And so I'm going to pull up the high Kanashi candle chart again. I'm going to pull out my trend line, trend lines within trend lines. And what are we going to be looking for again? Break.
Break of structure.
Exactly. We're going to be looking for a break.
Retest.
Retest, exactly. Break, retest, and sell.
And make them pips.
And sell, yeah, and sell based off where you are on the overall trend. I'd rather wait because I know my risk to reward is going to be amazing. I don't want 50 pips. I want 500 pips. Right? So there's so much power in having patience. I used to be that person that wasn't patient. I would get in. I'm like, oh, I know where the market's going. I have the skill set. I would get in early and then it would retrace. You need to realize that that candle can retrace against you within the last 5 seconds. And that's you're in the negatives instantly. That's why it's important to have more than one confirmation. Your best confirmation is going to be those bullish and bearish confirmation candles. Bullish and bearish variation engulfing candles.
Now, what is considered? I know Ricky explained it. If you can again, when you mention and talk about variation.
I'm going to draw it for you. You want me to show you how variation is?
Yes.
Yeah. Okay. I'm going to draw it here for you. So, I'm going to make this pretty here. Let's say we're in an uptrend right now. And then you can just let me know if you have any questions. Let's see if I can just copy and paste this so it'll be faster. Yeah, that's going to work. Okay, sorry. So bearish, bullish, I'm going to be doing a bearish variation. So more than one bearish candles engulfing this candle here. All right, let me make this a little bit smaller here for you to see. All right, so right now we're in an uptrend, and now we're looking for a sell. This is like your confirmation to get in on the sell on the 30-minute chart, right? And so I'm going to draw here. This is going to be a red candle here. Would you have gotten in a sell here?
No.
Why?
There's not enough confirmation.
There's not enough confirmation. It's buyers are still in the market. It hasn't engulfed.
Right.
So what's going to let me know this is going to be your confirmation now? This is going to be your bearish variation. It's more than one candle. Variation is literally more than one. What is the definition of variation? More than one.
More than one. Okay.
More than one. Simple as that. It's more than one. So what I'm going to be looking for is that candle to engulf that previous candle that I drew.
So the second candle has to break.
It's your confirmation. That's your time. That's okay. That's letting you know I'm ready to sell. That's your variation.
Okay.
That's it. That's all of the variation is. It's just more than one candle engulfing the previous candle. That's it. Okay. And then your bullish engulfing pattern is, or sorry, your bearish engulfing candle would be one big candle against this. Let me change the color here. Give me one moment. Oops, it's yellow. And that's what you need. That's your confirmation to sell or to buy. So this would be my seller's confirmation right there.
Okay.
Right? So this is your variation, and then this is your engulfing. This is your standard bearish engulfing candle, and it has to close below it. Has to.
Okay.
Variation, and then just your regular standard engulfing pattern.
Engulfing.
So that's what we're going to be looking for on the M30 chart or M15 chart. I say go with the M30 chart because it's a little bit less cluttered. And on top of that, use your high connection candle chart. Use all of these tools to your advantage. You know, learn how to use TradingView because it's really going to help you to your advantage. And so uptrend, now I'm getting ready to sell because what? Variation. I definitely wouldn't have gone here because it could have easily just retraced back up. You see that all the time in the market.
Right.
You see all the time that it messes with your confidence because, like, I swear I knew what I was doing. The market can't read your head, you know? It's exactly right here. You can even see it right here. I'm going to show you the example. Do you see this candle right here?
Exactly.
It went up. It didn't engulf it. I would have probably taken a sell if I saw another red candle. But at the same time, I rather wait for the bigger picture. You want to know where you're on the overall trend. So I'm waiting for that significant break, retest, and either one of these patterns I'm waiting for. That's it.
Okay.
That's how I trade. That's it. I keep it very simple.
Okay.
And also another tip for you. Can you see my sidebar here?
Yes.
So what I like to do is I like to actually label them. So this little red tab here is meaning that these trades are ready to go. I'm ready to sell them. The orange tab means that the trades are almost ready to sell. Like they're almost ready to go, basically. So it literally just declutters your chart. So you're not going back and forth like, oh, like, do I need to go here? Do I need to go here? Right? And so all these tabs, these red tabs mean that these trades are ready to go for January. I'm ready to sell AUD-CAD. I'm ready to sell New Zealand. I'm going to show you one last actually, or two more, just so you can see how patterns work. So this right here is, yeah. Oh, yeah, go ahead.
I saw a new pair I'm not familiar with. What was it? US 30? What is that?
Oh, don't worry about that. That pair is like next level. That pair is, you don't need to worry about that pair yet, honestly.
Okay.
I'm not even gonna trade it. It's not even worth it, to be honest to me. Like it's I don't know. But
okay.
I say just don't worry about that pair. Just don't worry about it.
Okay. Okay.
Let me comment on that one. That's going to be a stock that you can actually trade, and that's just from my understanding. But it's a pair that if you go on MetaTrader 4, you have the it's an indice, I believe is what it's called. You have the or index indice, one of those two. But you have the ability to go to your phone and add all types of things, even stocks. Like you can add like Apple, you can add Snapchat, and you can actually trade these things. And so that's what it is. And so if you don't know how that pair pip count moves and you don't really understand it as of yet, and I would right now at this point in where you are in your trading career, I probably wouldn't mess with it right now. And even myself, and I'm pretty confident in my abilities, but I'm telling myself not to really mess with it right now. Though I see Q making money on it and could I make money on it, I'm pretty sure I probably could. But do I want to mess with it right now? Just where I'm at in my trading career? Probably not right now, but maybe later on in the year, maybe, but not right now. Does that make sense?
Yeah, that's where I saw it at. Yeah, okay.
I'm going to quickly just run over.
Go ahead. No, I'm done. Thank you.
Go ahead.
No, I'm done.
Okay. I'm going to show you two more pairs just to show you the different types of patterns that you're gonna get used to seeing in the market. So this right here is a descending, expanding wedge, right? And so again, this is the weekly chart. And so what did I do? I took out my trend line, and again, I found the two significant points. This would be my first point, and this is my second point. This is a high connection candle chart, again, to clear up all the noise for you. You can clearly see how clean it is. Bounce, 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 bounce. Right at a point, a very significant point of resistance. So what are you looking for now? A sell. Knowing where this is a weekly chart. This is a weekly chart, right? I'm gonna put the regular candle chart here so you can see a little bit better. Oh, hold on. I think my Wi-Fi is acting up. Oh no, this should be okay. Oh, yeah. So basically, you see here that we had our first touch and our second touch. Do you see how significant that candle is?
Mm-hmm.
And that's letting you know that sellers are creeping back in. And I'm going to show you why it's been consolidating for so long is because of the holidays. So actually, I would have taken a sell here and taken profit right over here, just because of where it is. It's a previous point of resistance and the lower high point.
Mm-hmm.
Right? And so for me, what I'm going to be waiting for is an actual break, because now I know where I am in the overall market. I'm looking for sells. I'm looking for sells. Simple as that. Right? And so what I'm going to be looking for is this actually for this consolidation area to break. I'm going to wait for it to break, retest, and then sell. This is the H4 chart though. Okay. But I just want to show you, I don't want to keep you here for too long, but I'm going to show you how much pips you're going to get out of this. So this is like 600 pips alone by knowing the pattern and knowing where you are in the market.
Make sure I'm in that, babe.
Yeah. So right now I'm anticipating that sell. I'm anticipating that sell. It's only consolidating is because of the holidays. The market doesn't move like this. Oddcat doesn't move like this. It doesn't move like this. So what I'm gonna be waiting for is literally just a break, a retest, and a sell. That's it. What I taught you. Did you draw this? What I showed you? Where did I draw it? Sorry. Oh, I don't know where it is. It's okay. Yeah. And lastly, I'm going to show you a pair that I'm really anticipating a sell. Again, so this is a weekly chart. Are things getting a bit more clear for you? In terms of like just how I draw trend lines? Yeah. I literally just use 2 trend lines and that's it. So this is a high Kinachi candle chart. And then again, what I did is I took up my trend line and I just dragged it to the most significant touch. Don't worry about this. Don't worry about this. And then what did it do? It broke. It's a weekly chart. It broke. So it was actually in this consolidation phase since February of 2017, and then it broke November the 12th of 2018. So that was a whole year, a little bit more. It broke. So what are we anticipating? A retest, which is actually doing right this moment. So I'm actually anticipating for it to actually touch this point right here, this trend line and this zone. If you can, do you understand?
Yes.
Yeah? Okay, so then I'm going to scroll back down to the daily chart. And I'm going to remove this style here. Okay, and now I'm just, remember, it can drop at any single time, so it doesn't have to get to that point. It can drop at any time since we're so close to that point of, you know, of resistance. And so I'm going to scroll down to the H4 chart because this looks really blocky. Pull up my high Kinachi candle chart. And then look, same thing. It plays out every single time. What are we looking for from what we just learned? What are we looking for? I'm going to go on the 2-hour chart. Hold on. What are we looking for from what I showed you?
We're looking for a break, a retest.
Break, retest, and then sell. So you're going to be looking for a break, retest, and sell. And that sell is going to make you, if it drops from here, remember I told you my take profit points are the most significant touches. So I would have taken a sell, and I would have taken profit for 500 pips. TP2 would have been 800, you know what I mean? And then my third one would be 2,000 through some pips. But you don't have to hold it. You can scale it up, but that's why it's so important to know where you are, to know where you are. And that's just going to determine your whole month for you. Because now I know that I'm going to be selling for the whole month of January or February, possibly. Because I saw that break retest, we're anticipating to sell for the month. That's it. We're not
have you guys actually held the trade on the monthly time frame or the weekly?
For me to answer that question, no, but I don't think you would do that because it may take weeks to hold it. But I think what you're trying to say is that have we held swing trading is literally more than a day or two of holding your trade. That means you may be in it for like anywhere from 3 days, 2 days from up to maybe 7 days. You probably wouldn't hold
right.
but that's
me personally, no, I wouldn't. The most I'd probably hold a trade for like 2 to 3 days. It's depending. So I wouldn't know that I want to get out the trade is I'm going to be looking on the 1 hour chart. Okay. So let's erase this here. This is going to give you indication. You can even look at this on the M15 chart, but sometimes it really confuses people. So I know that I'm going to be exiting a trade based off when structure breaks. So say we got in a sell here, and now we're looking for a buy. So I'm going to know that we're in a buyer's market now is when, let me just use my favorite tool here. Let's see here.
I was waiting on you to use that.
I know.
I'm like, what is she waiting on? Oh yeah. Oh, that looked good. You see what she's doing?
Yes.
All right. So what do we have here? I'm gonna label it for you. Oh, maybe that pops up there. Okay. See you later. See you later. See you later. Okay.
High, low.
And you know exactly what I'm just gonna draw it so you can see. Higher low, higher low, higher low, right? And then we got, and this is for the H1 chart. So this is going to determine whether or not to get out of your trade based on the daily chart. Because once let me show you. Give me 2 seconds. Higher high, higher high, higher high, higher high. I'm doing this based off of the 1 hour chart. And again, you see how I like to use my trend lines, right? It's going to take my trend line as well. And break, what are we looking for? Retest. And that's going to give you your first lower high point. Your first lower high point.
It's really
and you're going to be getting on a sell right here based off what I showed you on your variation pattern. I don't think I deleted it. Did I really delete it? Sorry. Oh, no, I didn't delete it. I didn't delete it. Yeah. Oh, wait. I'm trying to find where I drew it. It's very funny. Okay. It's okay. It's all good. But yeah, basically, you see here, we have our higher low, higher low, higher low. It broke. Same thing that's going to happen here. I'm going to wait for it to break, retest, and sell. It's the same concept over here. So we have our higher low point, higher low point, higher low point, break, retest, sell, lower high point. Lower lows, lower highs, lower lows. It's the same thing. It's the same thing. It plays out every single time. And that's all you're waiting for. And then when I taught you variations and engulfings, right? And that's just all you're waiting for. You don't have to take it on the M5. You don't have to take it on the M10, the 10-minute chart or 15-minute chart. I just take it sometimes on the M30 chart or the H1 chart, whatever works best for you.
Okay.
So again, don't overthink. You see how I trade? I make money off of that. You see how Ricky trades? That's how he trades. That's how he makes his money. And so, yeah. So that's what I want to show you.
Thank you.
No problem.
How guys, how soon can I get this recording?
At this moment, I'm actually gonna stop the recording right now.